Hello and good afternoon to all the participants who have joined this afternoon. My name is Sandeep Sharma and I am from FMSF, and I would like to welcome all the participants who have joined us this afternoon. Actually, we already have around 1200 participants, and every microsecond we have a participant joining in. We had an overwhelming response, more than 3,200 subscribers who had subscribed for this event. Unfortunately, we had to limit it up to 3,000 participants. So therefore, there is a provision of one can view it in the Facebook page of FMSF, where it is being telecast live. Once again, I would like to welcome all participants on behalf of FMSF, which is the host organization. And this is being organized in collaboration with few other organizations, which are Center for Social Impact and Philanthropy, Ashoka University, Charity Aid Foundation India, and GuideStar India. So these are the three entities in collaboration of which this program is being organized. I have a very distinguished group of panelists and speakers this afternoon, and let me quickly introduce them. Well, the name itself introduces the panelist, but very quickly we have with us Ms. Ingrid Sinnath. She is the director of Center for Social Impact and Philanthropy, who has been passionate advocate for human rights, social justice, and civil society for the last many years. From CAF India, we have Meenakshi Batra. She is the CEO of CAF India. CAF India is one of the premier organizations which operates in several countries. She heads the India program and works with many organizations in India. Then we have Ms. Pushpa Aman Singh, who is the founder of GuideStar India and has a decade of experience in financial sector services. GuideStar is India's largest and most reliable NGO information repository. It is a source of reliable information on over more than 10,000 NGOs. So welcome to the three speakers who are going to represent the sector as civil society voice. So they will voice their opinion, they will share their perspective from civil society side. On the other hand, we have a team of technical experts, which is headed by none other than Dr. Manoj Fogla. Dr. Fogla is a brand name in itself. He's a renowned author, a best-selling author, possibly the best legal mind in the country as far as non-profit laws are concerned. So we are fortunate that he has agreed to be part of this panel, and he'll be heading the panel team. He's our chief or the principal speaker for this afternoon. Then I have with me Mr. Suresh Kejriwal, a chartered accountant by profession, someone who has worked for the development sector since many years, extremely sharp, and someone who is very passionate about NGOs and the voluntary sector as a whole. Then I have with me Dr. Sanjay Patra, who is the executive director of FMSF, has over more than 25 years of experience in the development sector, who is a chartered accountant by profession, but has been heading FMSF, is also an NGO. So he has a mix of both. He, on one hand, is a technical expert, but on the other hand, he also holds a very strong understanding and view of civil society. So welcome to all the participants, and I'm sure that we are going to have an engaging afternoon today. Well, the topic or the theme of this webinar is FCRA Storm, and storm it has been. It came unannounced, and we are just wondering whether it is going to blow us away, whether it is going to blow away the sector, or sector can wither the speed or the speed of the storm that is coming in. So we'll see that. We will get to see that how things are going to evolve. Which was a bill, when we had announced it was still a bill, which has received President assent yesterday, and it has been an act now. It has become an act now, which is yet to be notified. So the effective date of this FCRA Amendment Act 2020 is yet to come, but it has received President's assent yesterday, and it has already become an act now. In terms of the program that we're going to have, I'll just give you a brief overview of how things are going to work out. So in the beginning, I will invite Dr. Patra to set the context and also give perspective as to how this whole evolvement of FCRA and where are we today, how things are going to unfold in future. So he's going to set the perspective on that note, which will be followed by understanding the proposed, or rather not proposed, but understanding the amendments which has come. So Mr. Suresh Kejriwal is going to tell us point by point, the section by section, amendment by amendment, what was there and what has changed. So that is going to be very interesting. So he's going to give you a complete overview of all the changes that has happened through this FCRA Amendment Act 2020. Post that is something which is very interesting and very important. We are going to unpack, as the name suggests of this webinar, we are going to decode this whole amendment piece by piece, deconstruct the whole amendment and try to understand the critical part of it, the technical part of it, as to what it means for the civil society organizations, individually and sector as a whole. So there are a number of issues that has come up through this amendment, and we are going to decode that. Post which we will hear from the sector experts, the civil society representatives. As I told you, we have three civil society voices who are going to voice their opinion around that, which will be followed by an intense round of question and answer. So there will be an open session of question and answer. Unfortunately, we are in a virtual platform, so therefore all of us will not have the privilege to speak. But I would encourage each one of you to post your queries on the chat box. Remember, once again, I'm repeating, please post your queries on the chat box and not in the question and answer box, because we assume that there are going to be many questions that are going to come. My team here is trying to compile those questions, and we'll take each questions one by one. And I'm promising you that we'll not leave this webinar till we answer all the questions. Till the last question remains answered, we are not going to end this webinar. So you don't need to worry about that. But as I speak, or as this session progresses, what I would encourage you is to keep posting your questions on the chat box. So please don't share your name and which organization you come from. That's even though it's important, but not something we could accommodate right now. All this good morning, good afternoon messages, it would be good if you do away with that, and instead use chat box to post your queries. It will help my team in compiling the questions. So that is the overall program that is going to come. It is going to be intense one, interesting one. We already have close to 1,500 participants who have logged in the Zoom link in this webinar, and there are many more who are clicking in every microsecond, I would say. At the same time, there are many followers in the Facebook Live page. So that is what this program is going to happen. So it is going to be an interesting one. We have participants not just from India, from different other countries as well. We have participants from Germany, from US, and some other European nations. So it is going to be quite an interesting afternoon, I'm sure. On this note, I would like to now invite Dr. Sanjay Patra to please come forward and share his perspective on the FCRA Act.
That was my colleague, Mr. Sandeep Sharma, the Director of Programs at FMSF, a very passionate young civil society leader. Friends, it's a great opportunity to come together at this time such as these to unfold and unpack what is before us today. But before we do that, it is important for us to recognize where we are coming from. And for that, I would like to take you through a quick journey within 5 minutes of, I wanted to say illustrious, but I will say eventful history of 44 years of FCRA, Foreign Contribution Regulation Act. Many of you would know that FCRA was enacted in the year 1976, and it has undergone some changes which has made things tougher, and it has become what it is today. So in 1976, when the law came into existence, broadly most of the organizations got it as a gift. But in 1984, there was an amendment where two very key changes happened. One was that the registration was made mandatory to receive foreign contribution. And the second was that sub-grant from an Indian organization having FCRA money to another registered organization having receiving FCRA required the FCRA permission. So sub-grant was brought into the the FCRA ambit. It continued, and in 1996, there is an amendment to a form, which is the application form for registration under FCRA. And under the declaration and undertaking form, it was made mandatory that in case there is a change of more than 50% of the board members, a prior approval from the FCRA department would be taken. So that was 1996. And then in 2006, a bill called FCMC Bill, Foreign Contribution Management and Control Bill, was put in the public domain for discussion. Remember, FCMC is control. So basically, the shift was happening from regulation to control. And when this was put in the public domain, many organizations wrote back saying that this would not meet the current needs and challenges of the sector. For example, in that bill, the organizations of political nature and media associations was excluded, or it was put in the debarred category to receive foreign funds. Let me tell you that at the moment, still organizations of political nature and media are in the debarred category, whereas print media can receive 26% of FDI, news media 49%, and non-news 100%. Whereas in FCRA, it has been kept outside. Excluded foreign business receipt, and renewal was proposed every 5 years. Administrative cap was put at 50%. Multiple bank accounts for utilization was allowed, and so on. But after the response from the public and the civil society, the government decided not to go ahead with it in 2006. But then in 2010, almost the same provisions were brought in through the new FCRA Act 2010. And in 2011, the rules were framed. Then there were some changes which happened along the way. In 2013, some notifications came. One notification which is they talked about the compounding of offenses. So if you make an offense, you pay up the penalty and get free. So that compounding of offense for late filing of returns came in. In 2014, there was an advisory was issued that please don't have cash payments of more than 20,000 from FCRA account. In 2015, the rules were amended, and then one of the major changes that happened was it was made online. So most of the forms were made online, and online system was introduced in 2015. In 2016 as well, there was a notification. Let's not go into it. 2017, there was a money bill which was passed by the parliament, through which the definition of foreign source was amended. So foreign companies which companies were registered in India but having funding shareholding from outside were also taken as local source. 2018, certain notifications as well, they came. 2019, here it's important because it also links to what has been amended right now. The definition of bank account was inserted in the amendment rules, where it said that public finance management system, the banks which are using public finance management system or PFMS system platform, the FCRA bank account can only be opened in those banks. So if those organizations who had banks in non-PFMS compliant banks, they had to shift to PFMS compliant banks. Increase in the application fees was made, and so even though it's not a revenue generating mechanism of the government, but the fees were increased. And in 2019, there was another amendment where it said that the key functionaries of an organization have to provide an affidavit while applying for registration or renewal. So that is where the whole background or the journey of this whole act has come into being. And now we are at the threshold of a new amendment, or new amendment has already happened in 2020. Thank you very much. Over to Sandeep.
Thank you, Dr. Patra. I think that was a very interesting, input to give an overview of the journey that has happened over the years, how FCRA Act has changed, from regulation to control. So apparently it looks like, and there might be context, there might be reason for which it must have happened, and those reasons might differ from what the authorities who frame this act or rules believe and what civil society believes. So, but we'll not get into that debate right now. And instead, what I will do is that I will invite Mr. Suresh Kejriwal to come and present what amendments have come. And before I do that, just one quick announcement. As I said in the beginning, please use chat box to post your queries. In the question and answer section, it will be difficult for us to compile all together at one place. So therefore, I'm requesting once again to please put your queries on the chat box. Over to you, Sureshji.
Thanks, Sandeepji, for inviting me. I am just sharing my screen. Thanks, Sandeepji, once again for inviting me. Thank you, Sanjayji, for presenting the background of changes being made under FCRA so far, and setting the tone of today's discussion on uncoding the proposed FCRA amendments. The objectives of my presentation is to share the overview of amendments being made so that the panel can further go into detail and discuss the implications and possible action points for NGO sector. As Sandeepji has rightly mentioned, that this bill has become a law because Honorable President has given his assent yesterday only, but it has been effective from a date which has to be notified later. So though it's become a law, but it's not yet become effective. Now there are 9 key amendments made by this Amendment Act. One amendment is on inter-charity donations are being prohibited from FC Fund. There are reduction in the limit of administrative expenditure. There are public servants who are debarred from receiving foreign contribution. FCRA mother bank account is proposed to be with the State Bank of India. There is a proposal for inquiry at the time of renewal of FCRA. There is an amendment of mentioning the Aadhaar of board members or copy of passport or OCI card for the foreigners on board. There are the amendments for suspensions like provisions for prior permission category. There is a provisions for extending the suspension period, and there is a new provision for surrendering of FCRA registrations. So these are in brief 9 key amendments being made by the Act, and now I shall deal upon with each amendment one by one. The first key change is the inter-charity donations are being prohibited from FC Fund. As per the existing law, under any FC registered organization can transfer FC Fund to any other FC registered organization, or even to a non-FC registered organization with prior approval of ministry. Meaning thereby, the FC Fund can be transferred to another FC registered organization or to non-FC registered organization as well. Now the proposal is, the amendment that has become amendment, the amendment has prohibited the transfer of FC Fund to a FC registered organization and also to a non-FC registered organization. Meaning thereby, there is a total prohibition of transfer of FC Fund to another organization. So now, what are the implications? This will mainly impact the mother NGOs and also the smaller NGOs who mainly depends upon the mother NGO from funding support, because after the amendment it is not possible to transfer the FC fund. And in absence of any transition period, this may have its impact on the existing commitments because the fund has already come. The commitment with the various stakeholders have been made based upon that fund. Some of the projects are halfway projects. So in case there is no transition period, then there have its implication on the existing commitments. And this will also have its impact on the income tax, whether mother NGOs after receiving grant and consider grant as income are waiting for onward distribution as per program cycle. However, I understand or I feel because after the passing of the bill, making it act, they have postponed it to a different date, meaning thereby the government is thinking to come out with all these transition provisions while framing rules. The second amendment is the reduction in the limit of administrative expenses. As per the present law, admin expenses in any year should not exceed 50% of the total FC fund received in that year. Now it is proposed that limit of 50% should go to 20%. That means 50% becomes 20%. There is another provision that the above limit of 50% can be increased with prior approval of government. That section remains, meaning thereby the proposed limit of 20% can be increased with prior approval of central government. And the Rule 5 provides what can be included under administrative expenditure. That defines that gives the definition of administrative expenses on the basis of which this 20% limit has to be calculated. Not clear when the new rules shall be notified, but hope when the new rules are being notified, we have a clarity on the treatment of program salaries and program admin cost. This reduction limit to 20% may create difficulties mainly for smaller NGOs which gives FC support for institutional building only, so that they continue the program with the support of local and government funding. As the amount of administrative cost is reported under FC4, the annual return, NGOs should restructure their accounting chart so that the administrative expenses can be correctly determined and reported. Third amendment is public servants, they are debarred from receiving foreign contribution. Under FCRA, there are three categories: prohibitory category, regulated category, and non-regulated category. Section 3 provides the list of persons who are prohibited to receive foreign contribution. The public servant, as defined under Section 21 of the Indian Penal Code, are included in this list as per the amendment made. The public servant, as per Section 21 of the Indian Penal Code, includes 12 categories of individuals, and therefore, I understand there shall be huge addition to the prohibited category of person under FCRA. Now, there is a major change in the concept and the design of the FCRA bank account with the State Bank of India. As per the existing law, we can open our bank account with a scheduled bank, which shall be core banking compliant bank and integrated with PFMS. And presently we have a two-layer bank. First layer bank we call designated bank account, where all the FC money is going to be received. And the second, we can open a multiple utilization bank account from where we can receive fund from the mother account and we can use it bank account for the utilization purposes. Now what is proposed? The proposed amendment is this two-layer bank account become the three-layer bank account. And the first layer bank account, they are saying it FCRA account to be opened in any branch of the State Bank of India, New Delhi, as the central government specifies. That means this bank account shall be in SBI New Delhi with a branch which the central government specifies. That means this bank shall be determined by the government and not by the NGO. And whatever they notify, based upon that, we have to open this bank account, and the purpose of this bank account is all the foreign contribution shall be received through this account. That means earlier, whatever we are receiving through the designated bank account, now we have to receive all foreign contribution through this FCRA account maintained with the State Bank of India with any branch of the New Delhi as the central government specifies. Now the issue has come up, how an NGO based in Assam or Calcutta can open an account in New Delhi. I understand the Honorable Minister in debate in Parliament has said they are under talk with the State Bank of India, so that anyone can approach the State Bank of India near to that locality, and the State Bank of India of that branch will facilitate the opening of that bank account in New Delhi. I understand if this being the intent, then the opening of bank account should not be a problem. However, we should wait for the rules to be framed in this regard. Now, the second layer bank account, they are saying the NGO can open another FCRA account in any scheduled bank of their choice. And the purpose of this bank account is to keep and utilize the foreign contribution received in FCRA account. FCRA account that means SBI account. That means we can have another FCRA account in which we can receive fund from the SBI account, and we can also use it for keeping the FCRA fund or for utilizing the FCRA fund. And then they're also providing for that one or more collection bank account can also be opened by the NGO in a bank of their choice. The purpose is for utilization purposes. And this utilization bank account can receive fund either directly from the SBI account or from the another FCRA account. So basically now they have become three-layer bank account, and the SBI becomes the first account in which all the foreign contributions are proposed to be received. Now, these provisions will create a number of issues which requires clarity, and I understand the government should clarify those issues while framing rules. The issue is whether at the time of new application for registration or prior permission, we have to open two bank accounts instead of presently one bank account, or whether only one bank account with SBI will be sufficient. Whether present designated bank account needs to be reapproved because there is change in the purpose of the designated bank account from receiving to keeping and utilizing. The transit time required for opening the bank account in SBI and getting it approved by the ministry. How to receive FC fund during this time. Whether FC from local sources should be deposited in SBI or it can be deposited in any of the bank account. Whether certified copy of SBI as well as present designated bank account should be submitted with the FC for return. All those issues I understand needs to be clarified when the ministry is going to frame the rules. Now, next key amendment is the inquiry at the time of renewal of FCRA. The renewal process are presently on the basis of application made and are granted if there is no non-compliances on record. The amendment has made the renewal process similar to that of registration and prior permission by inserting section 12(4) of the FCRA for renewal process also. The 12(4) basically covers the conditions and situation which needs to be checked by the ministry before granting any permission, and it includes the identity of the person, fictitious or benami, and nature of the program, whether conversion or misuse, whether the person applying for renewal has undertaken reasonable activity in its chosen field for the benefit of society, or the acceptance of foreign contribution is not likely to affect national and public interest. So these are few of the points which the ministry may checking it before granting the renewal application. What's the implication? It will result in delay in granting renewal and challenging task for the FCRA department to grant renewal within 6 months of the application of renewal. And at the same time, I understand NGOs should revisit their status of compliance to mitigate the possible risk. The sixth change is Aadhaar of the board member and the copy of passport. As per the amendment made, any person seeking for prior permission, registration or renewal has to provide Aadhaar card as identification document of all its office bearer or key functionaries, or a copy of passport or OCI card in case the board member is a foreigner. Implication? It's easy for the department to know foreigners on the board, common governing body members between NGOs, and related party on the board. The next amendment is the suspension-like provisions for prior permission. Presently, FCRA registration can be suspended or cancelled, but there was no such process for prior permission category. Amendment is made for prior permission category that on the basis of any information or report and after holding a summary inquiry and the FCRA department has reason to believe on the basis of that summary inquiry, then the person who has granted prior permission has contravened any of the provisions of this Act, then the central government may direct that such persons shall not utilize the unutilized foreign contribution or shall not receive the foreign contribution which has not yet been received without prior approval. So these are the provisions similar to suspension provision for the existing registered organizations. Hence, all the prior permission category NGO should be more vigilant in their FCRA compliances. Now the next amendment is extending the suspension period. The presently suspension period to be completed within 180 days. This 180 days is proposed to be further extended by 180 days more, meaning thereby the period of suspension can be extended up to a period of 360 days, that is almost a year. However, no increase in the limit of 25% of the unspent FC balance for use during suspension period with prior approval. As per the present law, up to 180 days, the NGO can use 25% of the unspent FC balance lying with them with the prior approval. Though this suspension period has increased from 180 to 360 days, but this 25% limit remains the same. And thereby the department will now get more time to investigate, and the program activities will suffer for a longer period. And this will create a great hardship to those organizations whose registration is restored after completing of the suspension period. Now, there is a new provision for surrender of FCRA registration. Now, new section 14A has been inserted, enabling the NGO to surrender the certificate of registration. Earlier, once registration was made, there was no option for surrender, though there was an option for not applying for renewal after 5 years. Section 14A provides that the central government may permit any person to surrender the certificate of registration under this Act after making such inquiry as it deemed fit, being satisfied that such person has not contravened any of the provisions of this Act, and the management of foreign contribution and asset, if any, created out of such contribution has been vested in the authority as provided in the subsection 1 of section 15. I could not understand the rationale of asking for vesting all the property on surrender, even if no contravention is found. The surrender is accepted as per the law when, after inquiry, no contravention is found. And when no contravention is found, then why the ministry is asking for vesting of all the properties? Normally, vesting of properties occurs when there is a non-compliances, when there is a violation under section 15. So rationale of asking vesting of property on surrender, it needs to be ascertained. So these are the 9 changes. If I make a summary of these amendments, I find there are 3 types of changes. Some changes discourages soliciting foreign contribution, some changes leads to more control, and some changes provides for stricter penal provisions. When I talk about discouraging soliciting foreign contribution, it includes the changes intercity donation prohibited from Fce Fund, reduction the limit of administrative expenses, and the public servants debarred from receiving foreign contribution. All these goes for discouraging the soliciting foreign contribution. When I talk leading to more control, this includes FCRA bank account with the State Bank of India, inquiry at the time of renewal process, and Aadhaar of the board member and passport and OCI of the board member at the time of registration, renewal, or prior permission category. And when I talk about providing for stricter penal provisions, it includes suspension-like provision for prior permission, extending suspension period, and option of surrender of FCRA registration. So these are the new changes, 9 changes. And to conclude, I must say that President has given his assent on 28th of September, yesterday only. And when I see, I understand FCRA 2010 was also got the President assent on 26th September 2010. So that means after almost a year, this almost of the same 1 year, this amendment has been given assent by the President. At that time, though the amendment was made in, got the assent in September 10, but it was made effective from 1st May 2011 after a gap of more than 6 months. And during 6 months, the ministry has framed the rules and taking care of all the transitions issues from 1976 Act to 2010 Act. I hope and believe this time also the government will make amendments effective only after framing the appropriate rules and taking care of transition provisions, mainly for opening of the bank account and the provision of transfer of FC fund to another organization, and bringing clarity as what shall be included under administrative cost so as to remove any subjectivity of its inclusion. Thank you very much. Over to Sandeep.
Thank you, Sureshji. And I must say the last bit was quite optimistic. And I hope it happens that way, that the sector gets some breathing time, some time for transition to happen. But very nicely presented the various aspects of the changes that has happened. Now we are getting into something, a very important segment of this whole webinar, where we are going to decode each of the aspects that Sureshji presented just now and understand the finer nuances of it. So now I would like to invite Dr. Fogla, the principal speaker for this afternoon, to come forward, and I will raise certain issues to him, which I have compiled, through the research that I have done on the amendments that have come in, and I will also pick some of the issues that Sureshji has presented just now. So the first thing that I would like to ask you, Dr. Fogla, is this aspect of amendment under Section 7, which deals with inter-charity donation. As Sureshji was mentioning, that prior to FCRA Amendment Act 2020, inter-charity donation out of foreign fund was possible. So FC registered organization could transfer foreign funds to another FC registered organization. By virtue of this amendment, this has been blocked. So my first question to you at the larger level is it legally and rationally justified?
Good afternoon, everybody. If you see closely, the current law had a restriction that the FC registered organization only can be the sub-grantee. In the 1976 Act, even in the earlier part, there was no provision regarding who could be a sub-grantee. It could be a non-FC registered organization. And the transition of the Act which has happened over the years, for instance, in 1976, if you apply for prior permission under FCRA, in 90 days, if you don't get prior permission, it used to be a deemed prior permission. So those were the days where the country was starving for foreign exchange. If you remember, in 1991, the country had to mortgage gold worth 1,000 crore to make good some of its international liabilities. So FCRA is coming from an era where the Act was drafted in such a way that by all means foreign exchange should come into the country. And the same Act is now being used, the same spirit is being used to discourage foreign exchange, and that is why lots of contradictions are being created and lots of provisions which probably are not constitutionally sustainable are also coming. Now coming to the rationale of this Act, to my understanding, one of the explanations given by the government in the parliament was that there were some organizations which were engaged in conversion activity. This word was used, and the organizations were giving sub-grant, and there was a chain of sub-grant, and therefore government was not able to track the trail, and that was the reason why these amendments of inter-charity grant was necessary. Now, assuming that it is a genuine problem, and some organizations are, if you take the findings of the government, are engaging in some illegal activities. So if somebody is doing illegal activity, normally we don't change the law for that. All our public sector banks are starving and are on the brink of closure because most of the industrialists who took huge loans, they are not repaying. But for that, we will not pass a law saying that all public sector bank will stop giving loan any further to anybody. So in that sense, the rationale is quite misplaced. That is one part. Secondly, inter-charity donation, it is not about inter-charity donation. The work of a charity is based on the principle of trusteeship. If a valid trusteeship is created, then it is the donor's discretion to decide how the money will be spent, whether it should be spent directly, it should be spent through other charities. And Supreme Court and various high courts have held that inter-charity donation working through partners is on par with direct activities. So in that sense, I think it is a myopic amendment, and it may not serve the purpose for which it is intended. If people are misusing the law, there should have been some mechanism, because now people may get into various practices, opening multiple bank accounts at various locations, trying to give various type of contracts which are legally questionable. So on the face of it, the rationale and the legitimacy looks questionable.
Right. Thank you. Thank you so much for bringing that perspective. And now let me also put some perspective from the government side. So we've named this webinar FCRA Storm, and there are a lot of articles emerging which says that massively the sector will be hit. It will have an adverse impact and so on. Whereas if you go by the data, of course I have my own reservations with this data, but it suggests that it is only 8%. So basically less than 8% of the FC grant received is being subgranted. So if that is the case, why there is so much of hue and cry? What do you think?
No. Now, first, when you talk about the law are not prepared based on numbers. So the Article 14 of our Constitution provides equal rights to each denomination. So it doesn't matter if a particular category of a person, only one person is there in the country, and in another category, billions of people are there, still everybody would have a similar right. So on the face of it, a quantitative, whether the inter-charity grant forms a large component of the total grant making, I don't think is relevant in this context. And if that is so, then that is all the more reason why it should not have been disturbed, because in any case 92% of grant making, so the same argument would be placed the other way around. But now the issue is that in FCRA, when you receive funds from foreign sources, that is considered as a foreign source, foreign contribution. When you receive funds from Indian sources, that is when subgranting is made, that also is foreign contribution, but it is reported as subsequent recipient. And to my understanding, the FCRA form where one has to report subsequent recipient and first recipient, that kind of, because of the continuous change in forms, so I don't think those forms are being properly filled, and probably this 8% statistics may not be correct. When in either case, that should not be the reason. There should be a more legal rationale and constitutional rationale rather than the number.
Right. So I tend to agree with you, and at times I would play a devil's advocate. So participants don't assume when I ask question. So that is what I also hold the view. Before I get to the next question, I would just like to inform the participants that please use the chat box to only ask questions and nothing else. Because my team is compiling the questions. So if there are a lot of other kind of comments that are coming in, it will be difficult for my team to compile. So I will request all of you to just post queries on the chat box and nothing else. So the next question that I wanted to ask to Dr. Fogla is also some of these questions I'm seeing it in the chat box, that so we never know when this is going to come in force. So when will it be notified? We don't know. Surajji is quite optimistic, thinking it might take 6 months, 1 year. On the other side, it might be as soon as 1st October or 1st January. We never know. But the point is that the day it becomes effective, what happens to the existing contract? Because till now, this was valid, subgranting was valid. So what happens to the existing contract? What happens to the employee contract, the stakeholders with which such intermediary organizations are working with? So what happens to them?
No, firstly, we should not compare this amendment with 2010 amendment, because 2010 amendment, the 1976 Act was repealed. So now this 2010 Act continues, and only some sections of the Act are being amended. So in an act, it is a routine thing. In the Income Tax Act, every year sections are being changed, but we still continue with the 1961 Act. So in that sense, 2000 Act was a paradigm shift. Now, effectively, this act also may be a paradigm shift, but it is not comparable with 2010 Act, because when the 2010 Act came, there was no rules to fall back upon. Therefore, probably it took time, 7-8 months to bring the rules. But today, we already have an enacted and effective rule in operation, and just the act has been amended. So therefore, we have to keep our fingers crossed as far as the notification date is concerned. So let us not be very sanguine about it. Let us hope that it happens that way. But even if a 6-month window is given, it is not going to serve the purpose as far as the income tax and the inter-charity donation related provisions are concerned, because inter-charity donation contract is a contract between the donor and the recipient organization, the mother NGO, and the government or the FCRA department has no business with that particular contract, except the fact that, as the preamble of FCRA Act says, that this is an act to regulate foreign contributions if they are against national interest. So unless there is a reason for national interest, there is no reason for the government to get into a contract between the donor and the donee. So now, obviously, the government is making out a case that these are in the national interest, that the inter-charity donation should, so whether it is legitimate or it will see the light of the day, whether Supreme Court or some other bodies will come in between, that we have to wait and see. But all existing contracts, there are two parts to it. One, the procedural and operational part to it. One humanitarian part to it, and one legal part to it. So as far as legal part is concerned, all contracts face a kind of force majeure, an unexpected future event which was not anticipated at the time of signing the contract has happened. Therefore, both the party has to keep each other indemnified and find a way in the revised circumstances. So in that sense, I don't think the donor or the sub-grantee can seek a legal recourse based on this contract, because it is due to something which has happened in the country, not in the control of the persons who have signed the contract. So legally, but the tax applications, maybe we can take up later. As far as the grant making employees contracts are concerned, it is too harsh. It is too harsh because there are several national level organizations, and particularly those organizations which are lawfully, even if their activities are perceived as desirable or not desirable by the government, but if they are existing lawfully, there is no way but to give them a transition to the employees, transition for execution of contract, transition for the vendors, and probably transition to complete the existing contract. So this is a huge issue, and all these procedural and humanitarian issues are going to come into play, and government should take into cognizance, because this act has already been enacted and law. So the only window left with us is to hope that the government takes care of these provisions and the notification dates, and this particular provisions effective date maybe could be deferred, and for the transition period also, at least government should engage with the civil society and should understand their concerns and the legitimate hardships, though government did not engage with civil society and the affected organization before making the amendment, they should do it now.
Right. So possibly, the Section 7 amendment is really massive, and as you said, that it is going to have very, very significant consequences on a different level. Just one quick question, even though we would digress a bit, but also very important, is that along with the FCRA Act, there is also an Income Tax Act. And there are provisions related to utilization of fund, application of fund, and so on. So what happens to the tax liability aspect of this unspent fund, which would remain with the indemnity organization, simply because of the fact that they would not be able to do onward granting? Quickly, sir.
Now, both income tax and the FCRA law, there are many practices which are not consistent with the Act itself. So under the income tax law, the practice is that most of the charitable organizations throughout the country treat grant as income. And if you treat grant as income, then you have to spend those grant 85% in the year of receipt. And if you are unable to spend, you have to take it for the next 5 years. So those organizations who are unable to spend in this financial year obviously will have to file a Form 10, which is accumulate those funds for next 5 years, and then maybe find a way to either engage in charitable activity with permission of the donor by themselves, or refund the money back to the donor. The refund of money back to the donor will also be treated as application for charitable purposes under income tax. But more importantly, because of the wrong practices most of the organizations follow, grants are not required to be treated as income. They are legal obligations, and legal obligations should have been a liability in the balance sheet. And organizations following those practices, they may not have such kind of tax implications. But these are technicalities. I'm not going into details. Some technicalities maybe we'll share with the participants later on.
Right, right. So the last aspect on this particular issue of amendment under Section 7 is this whole issue of payment gateways and crowdfunding platforms. You know that crowdfunding platforms are mushrooming all over the world, and so as in India. And what we have seen is that there are two kinds of crowdfunding platforms. One are the ones which are run by these private limited companies, and there are also crowdfunding platforms which are run by non-profit organizations. So basically, the business is to solicit online donations both within India and also outside India. What do you think? First of all, is this permissible? And secondly, will this amendment have an impact on these kind of activities?
You are getting into mysterious areas of FCRA where people have different understanding, and people want that no further interpretation should be made. But since such a large number of people are with us, I should share that FCRA Act, if you see the Act is a very kind of a simple act in the sense the Act says that we will regulate foreign contribution only for certain individuals. And who are those certain individuals? In 1976, it were only NGOs. The word association was mentioned. And in 2010, 3 more categories were added. Who are 3? An HUF, Hindu Undivided Family, a Section 8 company, a trust, and an association. So now FCRA Act doesn't apply to anybody else. So now, if you technically see, though the FCRA department believes that it has mandate over private limited companies, but if you carefully see the FCRA Act applies only to Section 8, and it is a conscious omission, and all other private limited companies are not covered under the definition of the person. The FCRA department believes that it could be covered under the definition of association, which says that any organization, whether registered or not, can be covered in the residual category. But that is not how the law works. Company has been separately defined in the FCRA Act, and FCRA Act says that meaning of a company means the company as defined under the Income Tax Act. And if you go to the Income Tax Act says company means a company, and no other organizations can be covered under company. So cutting it short, technically a private limited company doesn't come under FCRA, but that is probably a drafting error. FCRA department has in the past issued FCRA registration to private limited company also. So in that sense, the perception and the law, there is a lot of difference. And when there is a difference between the understanding of the law by the authorities and the civil society, then only a court of law can come to your rescue. So one, to my understanding, FCRA law does not apply, which is quite a dichotomy. Corporates, private limited companies can receive foreign contribution, without coming under FCRA. They are not under. The only problem is that charitable organizations have exempt income. Corporates may have to pay taxes under Section 56. So that could also be one of the reason why private limited company has kept out, because FCRA law from 2010 says that if you bring money even without permission, and if you have not done anything against the country, pay maximum 10% of penalty, that is compounding of offense. So if you go through FCRA route, take permission or not take permission, you are paying 10% of penalty. And if you, as a private limited company, you may be subjected to a 30% tax penalty. So that could be a reason why privately limited companies has been left out. But this is an issue when we interpret the law. This is not the understanding of the FCRA department, and FCRA department believes that private limited companies don't come under. That is one part. Secondly, gateways activities. Gateways are intermediaries. When intermediaries are there, the FCRA law says that the FC registered organization should receive directly from the donor in its designated bank account, even the existing old FC law. So when you receive through an intermediary registered in India, as a recipient organization, you violated the law. It requires legal interpretation that can you receive, and it becomes an inter-charity donation at the end of the gateways also. So there was some legal confusion prior to this new act. But to my understanding, after this act is enacted, these gateways and this private limited company, even though technically they can fight and receive money, but they cannot make further inter-charity grant. So that is a huge area which the FCRA department lawmakers should also address, and maybe a lawmaker on the other side should explore also how they can use it.
Right. So this is again going to have a massive impact, and I'm sure it is getting interesting as we unravel and decode the FCRA bill, FCRA Amendment Act. I would like to now bring in Dr. Patra on this aspect of administrative expenses, and there are a lot of queries I already see that has come from the participants, and about this, lowering the limit from 50% to 20%. But before I ask you some data that I would like to present. Now it says the FCRA department website, the data suggests that out of close to 22,500 FCRA registered organizations, so it is basically 1,592 organizations who are spending more than 50% on administrative purposes, and 3,557 NGOs who are spending more than 20% on administrative purposes. So by and large, if we go by this data, most of the organizations are actually spending less than 20% on administrative expenses. So if that is the case, why there is so much of concern around lowering of this margin?
Thank you. Thank you. So I think the issue, first of all, let us clarify the data issue. My colleague Sandeep is not believing the data, I'm also not believing it, because this data, even if it is true, these are all self-declaration. You see, this has been picked up from the returns that have been filed by the organizations themselves. So the sanctity of that data is not clear. So lowering of from 50% to 20%. Now we should understand, there have been a lot of questions which are coming up about administrative expenses. Now what is administrative expenses? Rule 5 defines administrative expenses as of now. I mean, if they change later on and bring in something different, that is they change the rule, that will be different. But right now, as we speak, Rule 5 talks about what is administrative expenses. It says the following shall constitute administrative expenses. First is the salary, wages, etc. of the executive committee members or governing council of the organization. Second, it talks about hiring personnel for management of activities. So if there are costs incurred for management of activities, then that will be covered as administrative. Third is consumables like electricity, water, telephone, postal, etc. These are all administrative expenses. Fourth is cost of accounting. Fifth is running and maintenance of vehicles. Fifth is cost of writing reports. Seventh is legal and professional fees. Eighth is rent of premises, repairs to premises, and expenses on other utilities. Saying that there are two exceptions. The first exception is that expenditure incurred on salaries or remuneration of personnel engaged in training or engaged in research. So that is the first exception. So if there are personnel costs engaged for organization engaged in training or research, that would not be covered under administrative expenses. The second, it says that if any organization is directly in furtherance of the stated objectives of welfare oriented activities, then also those costs will not be covered as administrative expenses. For example, they're saying doctors, teachers, etc. So this is the definition of administrative expenses, and therefore these are things that are covered. So broadly, program management expenses, organizational running costs are very clear. They are administrative expenses, but program management expenses are administrative expenses, but program running costs are program expenses if you are having a training organization or a research organization or even a welfare organization. So this is the overall framework. Now coming to 50% to 20%, think it is important that you go back to the drawing board, take professional help in recasting your expenses, what falls in which bucket. So there are buckets which are given. There are 10 buckets which are given. There are 8 buckets are about different costs. The 9th and the 10th bucket are about training and research, and then the welfare activities. So if where it falls, then only you will come to know exactly what is the threshold in your case about administrative expenses.
Right. So thank you very much for that input. So you basically is saying that Rule 5, reasonably defines what administrative expenses is, and there are certain exceptions already given. So those expenses which we are incurred on implementation, direct implementation, could be considered as program expenses. The management part would be administrative expenses. But I would like to bring in Dr. Fogla here, and would like to ask you: is this a legal or an accounting problem? What is the problem? Is it a legal problem or is it an accounting problem?
No. When it is coming out of an act, so obviously there is some problem in the law, and it is a legal, and all accounting and all procedures we do because of either some contractual obligations or the requirement of the law. So that is why we keep on saying that there are only two lions. So one is the donor and the other is the FCRA department, who make the charitable organizations to report and keep things accountable and transparent. So now coming back to administrative expenses, regarding the legality is concerned, now though FCRA, because it is an internal security law, it is quite surprising that FCRA department believes that it has the mandate to micromanage the activities of a charitable organization, unless such activities are related with the interest of the country or something which results in detriment to our national interest. So that itself is a huge question, because that is not what the preamble of FCRA says. Otherwise also, reasonableness of a particular expenditure have been debated umpteen times in our courts of law. So for instance, in a company, the directors are paid crores of rupees as salary. Consultants are paid 2 lakh, 5 lakh rupees per day. These kind of cases have been debated all over the country, and courts have consistently said that business is the business of the businessman, and there is nothing in the law which empowers the income tax officer or any other authority to say what is reasonable and what is unreasonable. So that itself is a quite a surprising provision. It is existing for quite some time, because the government should not get into reasonableness. The government should get into whether it is applied for the intended purposes, whether it was misused. So I think that is what the mandate is there. That is one part. Secondly, what is administrative expenses? There are cases under, because we never had the occasion. Administrative expenditure came as a surprise in 2010, and for long there was no reporting requirement of administrative expenses. So nobody knew why administrative expenditure are being there in the rule book and what records to be maintained. Nobody was aware. Only recently we have some provision where we say what is administrative expenditure, and administrative expenditure is what is claimed by the organization. One example I will give you how to analyze and understand an administrative expenditure. There were some cases in high courts where it was discussed that what is the difference between an establishment expenditure, administrative expenditure, and application towards charitable purposes. What is important from FCRA is that whether the money was applied for charitable or religious purposes. Unless they dispute that, they cannot dispute the other thing. So now in the court they said that establishment expenditure is an expenditure which a charitable organization will incur if it doesn't have any program, any project. So now at zero project, if you are having X amount, that is your establishment expenditure. That is the expenditure which is not related to your program. It is quite puerile. It is quite baffling saying that an accountant, I am seeing the questions coming that we are running a night shelter. Can we give the rent as administrative expenses or not? Creating such kind of environment, that itself is very questionable. The government should come with clarity, because administrative expenditure, if I am running a project, for that I have hired an accountant. If for that I have hired a manager, obviously that should be treated as program expenditure. For that matter, there is no concept of admin expenses and program expenses in the larger law, because the primary law is the fiscal law, is the Income Tax Act, and FCRA also draws from the Income Tax Act. Under Income Tax Act, the only term used is that the money should be applied for charitable purposes. So if the FCRA department is not disputing that it was not applied for charitable purposes, I think this law itself is suspect, and it is a question of law. And certainly accounting, the charitable institutions also now pull up their socks, and because the 50% window was there, I must tell you one more important thing. In 2010, in the parliament, the Home Secretary said, the question was asked that why administrative expenditure has been kept at 50%, which looks to be a very high limit. The Home Secretary himself said that because there is no clarity about what administrative expenditure, what is administrative expenditure, therefore we have kept a limit of 50%, so that some expenditure which are overlap, and it is very difficult to interpret whether it is admin or program, they could be taken care of. And the change of government, at least the promises and the intent of the statutes, etc., this should continue, and it is in the records of the parliament. So now suddenly the administrative figure has been changed to 20%. We don't have anything that how it was made 50%, how it became 20%. But to my understanding, if it is being applied for charitable purposes, that is what the provision to Rule 5 also says. Right. That if you can establish that it is towards achievement of your programmatic and welfare objectives, then you can claim it for charitable purposes. Right. So from accounting point of view, I think the charts of account, etc., have to be reworked, and we will leave it here.
Right. So thank you. I think that was very clear. But on the contrary, the current dispensation, at least the minister on the floor of the House, apparently seems to have said that if need be, it can go further down. So it might go even further down if there is a need. So that kind of statements also have been made in the floor of the House. So it also reflects the mood of the current dispensation. Now, even though this whole conversation is getting very interesting, but I'm also conscious of the time, and we are somehow overshooting our allotted time period. So therefore, we will now quickly look at some of the very, very important issues. This is the third issue that I wanted to talk about, is this whole issue of surrendering of FCRA registration. Now that we know that FCRA registration is itself time-bound for 5 years. Earlier it was perpetual, now it is time-bound. So what does this whole surrendering mean?
It is not understandable, because there is a provision which says that you can surrender the FCRA registration certificate in 1976 Act, the certificate was perpetual. So therefore, there could be a need to surrender the certificate and declare that now onward I will not use FC fund and I can continue with the available FC funds. But now this surrender certificate, surrender, obviously it is an option, and it could be a welcome thing if it is an option. Why should we mind if the law allows you to surrender the certificate and not to wait for 5 years? Right. Fair enough. But the problem is that the surrender certificate says two contradicting things. One, they says that the surrender will be allowed only if it is found that you are totally compliant with FCRA law. Right. If you are totally compliant with FCRA law, then you will be allowed to surrender. Then the other contradicting things, once you surrender, all your asset will vest in central government. So if I am compliant with law, then the Constitution gives me the right to form association, to do activity, to hold assets, to have right to property. So if I am totally compliant of under law, I don't understand why the assets should vest in government. I don't think this provision could sustain itself, and I think good sense will prevail. If you see the existing provision regarding vesting of property and all the FC assets with the government is only in case of cancellation. Now try to understand, cancellation can only happen if you violate the law. Right. Now the FCRA Act currently says that in case of cancellation only, Section 14 will come into picture, that the assets will vest into with the government, but they have linked that maybe it could be an oversight. Surrender should not be linked with seizure of asset if you are compliant. And our understanding is that there is no need to surrender if after 5 years, if you don't apply, it is a deemed surrender. And in that case, probably Section 14A and seizure of assets will not come as per the law.
Right. So that's a quick message that you're giving, that, you know, if you don't want it, don't renew it. Okay. So now let us move ahead. This whole issue of renewal and of registration. Now that we know that every 5 years one has to renew it, and with this amendment, they are applying 12.4, which means inquiry before renewal, which was not there earlier. So normally 12.4 was being applied in case of new registration or prior permission. But with this amendment, even for every renewal that we go, the inquiry has been authorized. So government can initiate inquiry for every renewal. So what is your view on this particular aspect? Doesn't it look arbitrary?
There is much more than what we read and see in it. Try to understand. In case of renewal, they have linked the provision which are applicable at the time of prior permission and registration. So if you apply for prior permission, there is an inquiry which is done under Section 12.4.
Right.
You apply for registration, the inquiry is done. Now they are saying that we will do the same inquiry when we are doing renewal. On the face of it, it looks such a simple thing, and why at the time of registration, if you are subjected to inquiry, why not at the time of renewal? But it is not that simple. When I apply for registration or prior approval, I am not under FCRA. So the inquiry is confined to my credentials, antecedents, that whether, and there will be a police inquiry to see that whether the organizations exist, it is a charitable organization. But when I'm applying for renewal, there are two things. One, my existing certificate is live, because I have to apply 6 months prior to the lapse of certificate, 6 months prior to completion of 5 years. So one, my certificate is live. Two, I am asking for a further 5-year period. So there are two issues. So the FCRA department through amendment has mixed both the issues. One, at the time of my renewal, if I am compliant, I am doing all the compliance with the FCRA department. There is no reason to bring the certificate, the inquiry which was being made when I was an unknown commodity. When I applied for registration or prior permission, FCRA department did not know me. Now every quarter I go to FCRA department and tell that, look, this is what the funds I have received. Every small activity I inform to them, I file my returns, and my bank accounts are under PFMS. So artificial intelligence 24 hours is scanning my bank accounts. So in such circumstances, what is the question of my credibility? That is one question. Secondly, this inquiry thing is very innocuously inserted. So inquiry, to my understanding, should be confined only to the credibility of the organization. It should not go into the books and records of the organization.
Right.
If it goes to the books and records of the organizations, it will be tantamount. It will tantamount to going into a cancellation proceeding. So the non-renewal, renewal, and cancellations are three different things. And only for renewal, this linking this provision of inquiry will only create litigations, and maybe the government in rules should clarify that it is an inquiry, purely the kind of inquiry they do at the time of prior permission, and it will not be getting into books and records. I must tell you one more thing. To look into your books and records, to audit, the government should have information in possession. Therefore, they just cannot barge in into your office and look into your books. They have to have reasons to do investigation. They have to record reasons. They have to give an opportunity. But during this renewal process, this inquiry doesn't require all these things. And if it is an inquiry without a reasons to believe or a show cause, then that inquiry should be confined to the credibility of the organization as it is done at the time of prior permission. It should not go further.
Right. Thank you for that. I think that makes it very clear. Even though the whole matter is very confusing as to why this particular provision was brought in as far as renewal is concerned. I would like to bring in Dr. Patra again on this aspect of bank account, and I already see several queries coming in that the all bank account needs to be opened in SBI Delhi branch. So what does it practically mean? A person sitting in Nagaland or Manipur or somewhere in Jharkhand, how will it happen? Opening a bank account in Delhi, and how will the operation happen? What do you think?
Right. I think primarily there are two layers. One was the designated bank account, and the second is the operational bank account. So that is how the law was structured. Now, like Sureshji mentioned, they are bringing us a superstructure, another layer on top of these two layers, which is the State Bank of India layer. Now, it is a very unprecedented provision because probably for the first time a particular bank and a particular city is mentioned in the Act itself. So now we also saw that right now all the organizations who have designated bank account, they are having designated bank account in the PFMS compliant banks, which means that the government has prepared this public finance management system platform through which they are able to monitor the bank accounts. And we would like to believe that India has got a very robust banking structure with Reserve Bank of India as a regulator, and they are able to manage it well. So the intent of bringing of another structure on top of it, where it will be like a main gateway, is something that is very strange, because on one hand we are talking about ease of doing business or ease of doing charity, and making it a three-layer structure now would be a challenging part. But operationally, maybe the government will make it easy. They will say you go to the next State Bank of India bank branch, and then we will get everything sorted there. But that is not the point. The point is that what is the need for having this State Bank of India branch to have all these bank accounts where we are already having PFMS compliant designated bank accounts of all the FCRA registered organizations.
Right. So I think there is going to be a lot of confusion unless clarity emerges through the rules or notification the government is going to bring in. But one quick question on this particular aspect is, they are saying, the Act says that all foreign receipt would be deposited in this SBI branch, which is going to be notified. What about the local funds which are earned out of FC fund. You know, FCRA law says that any income out of FC fund is also a foreign contribution. So where will that local funds out of FC fund is going to be deposited?
Right. That's a very, very good question. Actually, what it looks like is that the first fall of foreign contribution in India will be in this particular State Bank of India branch. So all the foreign contributions that are coming from outside of the country will come and fall there, and then it will go further distribution downstream. So now I think that it may not even allow any other contribution, local contribution, to be even deposited in that bank account.
Right.
So it could be that there will be the second layer bank account, which would allow. So this is something that is still not clear. We should wait for the clarity to emerge.
Right. So we wait and see how things unfold.
Just Sandeep, just to add there.
Right. Please go ahead.
Under the FCRA law, as far as foreign contribution are concerned, when they come from foreign source, they are accounted on transaction basis. That each transaction should fall in the designated bank account, and now the SBI statutory bank account. But as far as the deemed foreign contribution, that is the earning out of foreign project, which also is considered as foreign contribution, is concerned, the law says that during the year, that means at the end of the year, if you find that there is some FC income, then you better account it for the FCRA purposes. For instance, you are running a vehicle from FC funds, and every day maybe you are using it for partially for commercial purposes. So each time you receive some money, that is not FC money. At the end of the year, if you have made some money, maybe 5,000, then that is FC income. So in that sense, as subsequent recipient, probably it should be deposited in the designated bank account available with the organization, not in the SB. There is nothing in the Act to prevent that. But as Sanjay said, that now it is very important how government perceives it and what kind of rules they bring in.
Right. So let us quickly move ahead and talk about another amendment that has come with regard to this suspension period, which earlier was 180, which has been extended to 360, allegedly arbitrary many times. So, so can the government seize accounts and keep the organization inoperative for 360 days? What does it mean practically, Dr. Fogla?
No. If you see the FCRA Act, the section 13, which talks about suspension of account, it doesn't provide for any opportunity of being heard before any order for suspension is being passed. And this is quite unusual. And this particular section was taken up in various courts, and Delhi High Court in particular came up and said that even if it is not provided in the Act, the FCRA department cannot seize the account without having appropriate reason and without giving adequate opportunity of being heard to the organization. So to my understanding, those provisions in any case are continuing. But 180 days in itself was a pretty long period, because you try to understand, it is such a harsh provision. You close the organization because the entire bank accounts, the next month's salary to the staff will not be given. This maybe there would be some small animators, some beneficiaries. The government doesn't know the fund for what purposes is being used by the organization. Assuming that all organizations are misusing fund, or the organizations whom they suspect are misusing fund, even if there is a merit in suspicion, you cannot hold the activities.
Right.
Provision for 25% money could be used, 25% of the available fund. But normally, it is normally the approval for such 25% doesn't come from the FCRA department. So basically, the organization is almost at standstill or defunct at the end of 6 months, and now it will be taken to 12 months. So certainly, the suspension provision in any case was very harsh, and 12 months is too long a period to close an organization. The only silver lining is that it is judicially established that such actions should be taken responsibly. So we should expect that the government will take only against genuinely errant organizations, and the organizations will also have an option to going to courts of law in case an arbitrary suspension order is passed against them.
Right. Okay, so two more issues with regard to the amendment that has come in. One aspect is about this public servant. This government servant definition has been enlarged and now public servants are included. So what does it mean in terms of, will NPO board members, for example, be treated as public servant?
No. NPO board member, if you remember, in the Lokpal Act, there is a provision which said that an NPO, if it receives more than 10 lakh of foreign contribution, then the board members will be treated as public servant for that particular purposes of that particular act. But in this particular amendment, there is no special definition for public servant has been given, but a very broad definition for public servant has been given. Let us not go into the definition of public servant, but it will not include the board members of NPOs.
Right. So the another quick question, which already we've been receiving from different quarters, is with regard to, will public servant in such case be allowed to be board members of NPOs? Can public servant become board members of NPOs by virtue of this amendment that has come in?
This is a general misconception. In the past, questions have been raised. Can a member of parliament be a board member in a charitable organization? Can an MLA be a board member? Can a public sector? Because when you become a board member in a charitable organization, you don't have any conflict of interest. Each board member of a charitable organization is an independent board member. In private limited companies, you have interested board member and independent board members. But in charities, all board members are independent board members, and there is nothing in the law which stops a public servant or a MLA or MP to become a board member of a charitable organization. The only that should be taken, they should not be functionaries, they should not hold offices, because if you hold offices, then it is subject to the permission of the other offices you are holding and the conditions under which you are working as a public servant. So those things should be taken into consideration.
Right. I think that makes pretty clear with regard to this public servant issue. The last aspect that I would like to ask you is this whole aspect of Aadhaar and passport of board members. What are the implications of it? Aadhaar has remained a contentious issue already in India, and there are cases lying in the courts with regard to its applicability now that it has been made under an act. So what would be the implication? What do you think on this particular aspect?
For small people like us, there is no implication. Just submit the Aadhaar. Because bigger groups are fighting the cases. So now the issue, it is a part of the act. So either you take it out of the act or you comply. So the other is whether it is reasonable to ask for an Aadhaar, why a PAN card should not be accepted and other things. So that debate can continue, but it is already a law, and you have to submit the Aadhaar and the passports if the board member is a foreigner and foreigner of Indian origin as well. Right.
Thank you very much. I think this was something, clarifies a lot of issues. We've decoded the bill, the act, in fact, and discussed in minute details the various provisions. So I think a lot of clarity has emerged with regard to the new amendment that has come in. I would again encourage participants to send their queries. I know that a lot of queries have come, to continue to do so, because what we are going to do now is that we are going to hear from the civil society leaders. And post that, we'll be taking up question and answer. So continue to send in your questions. But before getting into the question and answer session, I would get back to my speakers, the civil society leaders. As I said, we have Ingrid, Meenakshi, and Pushpa with us, who would share their perspective. First, I would like to go with Ingrid. Ingrid, you've heard the act threadbare, possibly minutest detail has been discussed. So from a civil society leader perspective, how do you see this unfolding? What would be the implication? And if you could also, give some pointers as to what could be the way forward.
Thank you, Sandeep, and thank you, FMSF and Dr. Fogla for hosting this, because it's very, very desperately needed. These amendments have thrown the sector into complete panic, and we're very grateful for your helping us to navigate through this minefield that we now confront. I should say up front, first of all, that any views I express today are my personal views and certainly not the views of the university. I also cannot claim to represent this very, very diverse sector of which we are part. So in some ways, I can present a point of view, but not any definitive point of view on behalf of civil society. I have 8 points to make. The first point is, while the government says that these amendments are necessary, they have provided absolutely no evidence to support the claims of misuse or misinformation to warrant these additional constraints. The second point is that, as many of you have already pointed out, if the government requires us all to open a bank account in a particular designated branch of State Bank of India in order to satisfactorily monitor the flow of foreign funds into this country, then what happens to the 309,000 crores of FDI that is coming in? How are they monitoring that? How are they monitoring all the foreign contributions to electoral bonds? Because any entity incorporated in India can contribute to electoral bonds. How are they monitoring foreign contributions to PM cares? I mean, there's, as I said, 309,000 crores of FDI, 9,000 crores of PM care, 6,000 crores of electoral bonds. Why must all of that money not come through this single branch of SBI in Delhi so that the government can keep track of it? The third point is on subgrants, and I'll spend a little time on this because there are many aspects to this. One is that it essentially disadvantages organizations that are smaller, that are less well known, that don't have the ability to access international donors. These organizations have depended in many ways on intermediary organizations, not only to provide access to such donors and to such funds, but also for capacity building, monitoring and evaluation, advocacy on their behalf. This will now become immeasurably more difficult. It's not impossible, but it's immeasurably more difficult, increasing the transaction load on the donor considerably. The second one is, what happens to multinational corporations who currently route their CSR contributions through their own corporate foundations? Will onward donations then from the corporate foundation be treated as a subgrant? So will they now have to completely rejig their operations? We've talked about international donors and companies, but I think the hardest hit in many ways will be diaspora Indians, not Indians with Indian passports, not Indians overseas with Indian passports, because obviously their funds do not count as FCRA, but overseas citizens of India, people of Indian origin who are no longer citizens of India. These people are the most generous diaspora in the world. We Indians overseas give more money back to India than Chinese people give to China, Mexicans give to Mexico, or any other country in the world. We have just made it infinitely more difficult for the diaspora Indian to identify organizations that should receive their support and to channel that money and make sure that money is well used and then report on it. The fourth part that relates to the subgrants is it's made coalitions and alliances very difficult to operationalize. We've seen, particularly during COVID, the benefits of these kinds of coalitions and alliances. Yeah. A single grant from, let's say, an international donor was then allocated across 60 organizations that were members of a coalition. That allowed this coalition then to respond at scale. It allowed this coalition to respond virtually overnight to the needs on the ground. It allowed this coalition to allocate resources most efficiently so that there was no duplication of effort and no duplication of information seeking. They could learn from each other and so on. This is the sort of thing that this new law is going to make infinitely more difficult. Most Indian donors are reluctant to fund non-program expenses. They're also very reluctant and increasingly reluctant to fund work in human rights, environmental justice, research, advocacy, that kind of work. By making it hard for international donors to give money to India and for that to be then onward granted to these kinds of organizations, the government may well literally put the last nail in the coffin of work like that. Can there be workarounds? Possibly they could. It will, as I said, substantially raise the transaction load and the transaction costs. It will provide a substantial deterrent to NGOs. I've already heard from some organizations that their donors are saying, well, if India doesn't want our money, there are plenty of countries that do. Why should we jump through these hoops just in order to provide money to Indian organizations? And finally, even if there is a workaround that says I will be a private limited company instead of I can recall Rajnath Singh, when he was Home Minister, categorically saying this, that if your work is covered by FCRA, it does not matter how you are registered, you will still be liable for all the provisions of FCRA. This is, in fact, been the major argument that they have used in their pursuit of Greenpeace and Amnesty, which, as you know, has today shut its operations in India exactly after a campaign of this kind of targeted attack. The 20% cap on overheads will make it much harder for organizations to build sustainability. So investments in training, in financial and legal advice, as Sanjay Patra pointed out, in technology, will all become harder to do when I'm trying to minimize my administrative expenses. Certain kinds of organizations, a think tank, an advocacy organization, a consulting organization, for example, by definition is primarily personnel costs. By definition is primarily admin costs. If you are feeding millions of children, then certainly applying a 20% overhead cap may well work. But if you're hiring a group of experts to do policy analysis, then it's highly unlikely that you're going to be able to meet the 20% requirement. And as Dr. Fogla just pointed out, it suggests a complete lack of understanding on the part of the government of what the range of activities that nonprofits do, or it's a deliberate desire to obstruct the growth and sustainability of the sector, or both. And as Dr. Fogla pointed out, why does the government not legislate how FDI investments are spent? Why are foreign direct investors not being told you can only invest 2% of your investment in advertising, 5% in R&D, 16% in personnel? Why this differential treatment across the two sectors? I want to talk a little bit about banks, and this is the fifth, or rather a set of more irritant than anything else. Many NGOs already face great hostility from banks and great difficulty, for example, in understanding the distinction between people of Indian origin versus Indian passport holders when it comes to FCI. This has just made the NGO an even less desirable client for the average bank to have, because they can only suffer losses here, right? I mean, if they do everything right, nothing happens. They don't gain very much. We are not great borrowers. We are not, huge investors of any kind. But if they step out of line even by a millimeter, they will find themselves in trouble. And so there's a great deterrent in some ways for banks to even entertain NGOs as clients. This 360 degrees latitude that the government has now given itself means that the process has become the punishment. So they don't need to prove that you're guilty of any violation anymore. By dragging their feet for 360 days, they will anyway ensure that you are no longer able to function. Sixth is the timing of the move. I mean, this cannot possibly have come at a more inopportune time. This is a moment where, first of all, the need for the services that NGOs provide is at a historic high. The economists are telling us that 100 million people have been pushed back into poverty. We haven't seen even the peaking of the COVID pandemic yet. We're still seeing huge effects on not just on livelihoods, but on a range of issues, including child trafficking, child marriage, all sorts of violence against women, and so on. All the projections suggest that next year's CSR budgets will be substantially smaller than this year, because as corporate profits fall, necessarily CSR budgets will fall. Also, as corporates are laying off people and implementing austerity measures in their in-house, it becomes very hard then for the corporate to be writing checks to charity. And so there's every likelihood that CSR budgets are going to fall. There's every likelihood that other sources are also going to fall. HNIs, middle class, everybody is looking at their assets right now and seeing higher uncertainty. And that kind of uncertainty is never conducive to giving money away. And so just at the time when the when the need for resources is greatest and the crunch on resources is severe, the government is now making yet another source of resources more difficult to access. The seventh point is on constitutionality and violations of international law. In 2016, the then UN Special Rapporteur on Freedom of Association and Assembly had written to the government stating that the FCRA is both unconstitutional and in violation of international laws. And he bases this essentially saying that the limitations placed do not meet the test for allowable restrictions under international law. The test requires that restrictions should be imposed solely to protect national security or public safety or public order or public health or morals or the rights and freedoms of others. There is nothing called national interest in that list. This is a new red herring that the government has created in order to justify targeting the people that it wishes to target. The International Commission of Jurists has just this week, written to the president to say these new amendments are further violations of both constitutionality as well as international law. The Aadhaar requirement may well be violative of Supreme Court rulings on the making Aadhaar mandatory. So there's a whole set of legal issues around the laws as well. Finally, as an eighth point, coming on top of what is already seen as a systematic targeting of human rights defenders, protesters, journalists, activists, the effect that these new amendments will have is to have a kind of a chilling effect on any kind of dissent, any kind of challenge to the government, any kind of even analysis of government policy. And the process of tabling a law, having both houses of parliament pass it within 72 hours with no prior consultation, no deliberation in committee, and then have the president sign it in less than a week is just, for me, it raises serious questions about whether we are still a participatory democracy or not. That's, I think, from certainly my point of view, my individual point of view, I should stress, some of the issues that we need to tackle, in addition to all of the logistical nightmare that has already been presented by the previous speakers.
Right. Thank you, Ingrid. I think no better way than to summarize the pain, ethos, challenges, and the concerns of the sector. Even though you say that you don't represent the entire sector, but the manner in which you have expressed, in some sense, is representative of the issues that the sector is grappling with. And I think it's beautifully said. I dare not summarize what you said. Also, given the fact that the time we are running short, I would now like to go to the next speaker, Meenakshi. CAF India works with number of organizations, and one of the primary role of CAF India is to support local organizations to do their work. How do you see with this new amendment coming in the impact on at that level?
Yeah. Thank you, Sandeep. Thank you, Sanjay, Dr. Fogla. It was really good to hear from you. We have been sort of struggling with, understanding this law for the last few days. And when you need to deal with a crisis, you really need to understand what has hit you, and then you can, try to see how you can find your way forward. So I'm going to, speak from the perspective of Ingrid has really covered good grounds. I mean, she's really, articulated very well the impact that the civil society is seeing on themselves because of this law. I'm going to cover it from the perspective of the work that we do at CAF. We work as an advisor to donors where we advise them on how they can invest, for impact and for accountability and with accountability. And also, on the other hand, we sort of work as an extended arm of not-for-profit organizations to raise resources, funds, know-how, volunteers, etc. And we have been sort of supporting about 300 organizations on an average every year, helping them resources from Indian and foreign sources. We have also been sort of doing some work with Indian diaspora to help them find good organizations on the ground, good projects, and to help them manage their funds. So with this change in the FCRA, we feel that the not-for-profit sector will be very severely impacted. First of all, the smaller organizations who do not really have the kind of infrastructure that bigger organizations have. They, are resource starved. They work on stretched resources, so they will be very badly impacted. They have huge dependency on larger organizations for fundraising. They do not have access to international donors or even national donors a lot of times. So these are the organizations, based in the remote areas. So they'll find it very, very difficult to find money, find funds to continue with their work, and many may find it very difficult to survive going forward. And also, those who really strive harder, they will find that the cost of fundraising will shoot up for them. It's not easy to fundraise. It's not easy to find resources where they are and navigate their way through this whole, complex, networks. So for them, particularly the organizations which are in remote areas, those are the ones that we were trying to reach out to. They'll find it very, very difficult to access resources. Fundraising, particularly, the money that comes from FCRA route. A lot of money of CSR also is accounted as FCRA. That's another area that we really need to look at. But generally speaking, they will, the organizations will find it very, very challenging to raise funds. I mean, CAF has been doing this for at a cost of about 1 to 3%, which is really very, very low. But now people will have to, have human resource, have the networks if they want to, continue with their work on the FCRA funding. Where are the RFPs? Where are which grants have been sort of opened up for funding internationally? How they can bring in those resources? That will become a huge challenge. And as Ingrid was saying, the Indian funding, CSR funding, will also go down in the next 1 or 2 years. So that will further stress the whole system. And also, sort of looking at it from the point of view of international donors, for them the cost of dispersal will also go up with this, because now they will have to make individual grants instead of the block grants. So with this comes, the individual due diligence of the organizations, of the recipients, and they will have to be, validated internationally, and the cost of transfers also, etc., will increase. So such increases will actually, discourage donors from giving. If a donor is giving through an international system and they find that the cost, instead of, sending block grant via one counterpart organization in India, they have to sort of now work on individual NGOs. They have to find do due diligence of those organizations and do individual transfers. It will not be very encouraging for them internationally. And also, the organizations which are part of the international network and they have their offices here in India, they will be disempowered with this change. Their status will be reduced to being a liaison office, which is tasked with certain activities to do, but they will, decision making, fund management will all happen internationally. A lot of organizations are trying to move money locally and working with the local counterparts to manage the funds locally and make decisions locally. So that is also something that will move away from the ground realities in our country. And the joint people have been talking about umbrella projects where one organization received money and then they were looking at collective impact and working at scale. Those are the activities that will get very badly impacted. The other area I think that we need to explore is the CSR funding. A lot of MNCs continue to use FCRA route for routing their CSR funding. So sub-granting in such a case is something that needs to be looked at. While the law permits treating CSR contribution as domestic funding, but this law will cause a lot of disruption in established and ongoing relationships as well. Also, where the MNCs were making a donation to corporate foundations, would they be able to sub-grant? Because, that whole FCRA, this implication will be there for them. And I think the rules will provide us more clarity. Hopefully, for things like admin costs, there will be thresholds, hopefully, for smaller grants to have higher admin percentages is something that's very, very desirable. I hope that that's something that government will look at. In terms of going forward, I think the funding will overall shrink from foreign sources. So we as a sector really need to now, work on growing the local culture of giving. What can we do? How we can be, building bridges with local communities, because there is a lot of bad mouthing of NGO sector generally in public. Media is after the not-for-profit organizations. So those are the things that we really need to look at. We really need to reflect on and re-strategize, going forward in future. We must, engage much more with our local stakeholders going forward in future. Foreign funding, in any case, has been shrinking, but this will shrink further. I don't need to really say it. The NGOs do really important work, and that work needs to continue.
Right. Thank you so much. Actually, I think the impact is massive, and I don't need to reiterate that again. But you also showed us some ways by which one could sail through this storm in terms of looking at alternate sources of fundraising and possibly targeting more the local fundraising aspect of it. So I think that's something which is very important, significant that you talked about. But as you said, the impact is going to be massive on the sector. When in some sense, double whammy. On one hand, COVID-19 and this FCRA amendment 2020, the sector has faced with. At this time, I would now like to invite Pushpa. And Pushpa Yaitsa has 10,000 plus organizations that you work with, and many of them smaller grassroots level organizations. With this amendment coming in, what do you think? What are the alternatives available? Pushpa, over to you.
Thank you, Sandeep, and thank you, Dr. Patra and Dr. Fogla, and all my well-informed, well-intentioned speakers, Ingrid and Meenakshi. I am going to, at the fag end, I'm actually really trying to look at what are the alternatives in front of us. I work with NGOs of all sizes and spent the last 10 years particularly in illuminating their work. And prior to that at Give India, I was trying to kind of get small NGOs to tell their story and raise money. Just to put things in perspective, we're still trying to figure out what's the population of nonprofits in the country. I don't buy the 3.3 million number when I'm trying to discover NGOs all the time. But even if we were to put it at about 2 million, or 20 lakhs, it's only about a little over 2 lakh organizations that file tax returns. And, if you look at the dashboard on the FCRA site, we had a total of 49,500 odd organizations who had FCRA, and the active ones are in the 22,000 odd. So I'm saying this, yes, I agree with all of what, the previous speakers said. It's been harsh, it's come suddenly, and so many things have happened, and it's going to impact us. The timing is not right, all of that. But 22,000 organizations, it's not a small number, but it's not everything. And Meenakshi kind of said towards the end, about domestic philanthropy, about individual giving, and what has been happening in that side in the last few years. And what is the kind of philanthropy ecosystem building work that's been going on? It's been slow, but we definitely are much better off today than when I joined Give India way back in 2001. There's so many ecosystem building organizations. There's so many local philanthropists who are supporting the ecosystem today, much more than even in 2009 when I started GuideStar in India. So I want to and I saw some of the questions to the panelists of late asking about, this has happened, so what next? So while, some of our panelists today and Vani and others are trying to take this to the next level in whatever way they can engage the lawmakers and, hoping for the best before the rules are declared, I want to see as we as nonprofits, some of the speakers said, what we need to look at, but also, what are the options? Are we just going to say that this slice of funding has moved out? So does that leave nothing in front of us? So last year, actually, Satwa put out this report on everyday giving, and CAF keeps bringing out reports on, the giving index, and Ingrid also puts out a lot of research reports. And I'm fascinated by the untapped potential. We still have so many building blocks to tap into generosity of people. This slide is, I've just taken this picture from, I was sitting when this report was launched in Bangalore in April 2019. And, this artist just put together all that was being discussed in the room. And just look at this and see, are we doing all of this? How far have we moved in this? While, some of us in the sector should definitely work on responding to the changes and helping people build capacity to cope with what FCRA, the amendments are going to throw up on us. There's still a lot that we have to kind of flex our retail fundraising muscle. We have to do a lot more, and there's a lot of low-hanging fruit. What the pandemic has shown, of course, Ingrid and Meenakshi are that much closer to financial flows to the sector, but just by virtue of working with so many nonprofit organizations, I find that sometimes we, just miss the bus because we are kind of too caught up in seeing what's going wrong. A lot of individuals have raised enormous amounts of money directly to be, cash transfers or benefit transfers to people who they never knew about, strangers. So many people came forward, and all of the crowdfunding portals about whom you spoke, some of them, they were so focused on medical emergencies, have suddenly now, seen how nonprofits have, the fire in the belly now, literally, to kind of express that sense of urgency and do fantastic fundraisers. So there's a reinvigoration that has happened during the pandemic for individual giving and individual fundraising. And I think a lot of good also has been told about the sector by the organizations and by government, who's come up with this as one of the measures. But there's also, for a change, there's been some good publicity for the sector. So, let's not completely start crying hoarse over what has happened and focus on what we can do. And what more can I say when we are, on the eve of our annual festival of giving, just starting with Gandhi Jayanti 3 days from now, or our participation in the Global Generosity Movement Giving Tuesday in India, that's going to be on the 6th of October. And we're literally kicking off, if at all any fatigue had set in with the pandemic fundraising, this is going to be reinvigoration before our months of festival. And I think people want some positive energy to flow through. And that's what I've been doing in the last 5 weeks, talking to nonprofits. And I see much more interest in the sector now on individual fundraising. So I think that we must also discuss, if not today in the short time, but start looking at the innovations in the philanthropy ecosystem that have happened, the number of leadership development programs, the capacity building programs, the sessions on resilience, the donor education that is happening. I was at a session where Britspan was talking about, pay what it takes to do certain things. So when all of this is happening, I'm not completely, looking at the dark side of things. On payment platforms and donation platforms, I did hear Meenakshi talk about the cost of fundraising going up, or how difficult it is going to be, for some of the smaller NGOs. But what I find is that the payment platforms are getting really much more user-friendly. They're able to knock off the cost of fundraising in many ways. They have given up on their admin, cost, be it Milap or Keto or Crowdera. They don't take any admin cost. That what is left is the transaction cost. They believe that donors are giving voluntarily. They're trying to pick up the individual donors some of the admin costs. So these are really exciting times, out of a lot of churn. I think a lot of positive energy is to come out. There are numerous capacity building programs that have been launched. ILS is talking about fundraising. We have committed ourselves to every Tuesday fundraising on the practical aspects. And we've also seen a lot of volunteers or digital experts, brand storytellers who are coming and saying, I'm willing to give my time. I'm willing to share my skills to help not-for-profits. In a moment, I'm going to talk about one or two examples that have really, been born in this crisis situation and are kind of pumping philanthropy to doing good without really having any commercial side to it. The other thing is, if we don't get our act together, and where and why we haven't got our act and why we landed up, I think, trying to speak several times saying that, have we done enough to, we hear about the trust deficit. Nobody is comfortable to give to nonprofits. The discovery process is still quite sluggish to find organizations that match the individual donors' needs and all of that. Somewhere COVID has actually shown that people have figured out how to directly support people. Is that good? Yes, it is good. But is that good in the long run? I'm not so sure, because again, you're talking about informal philanthropy growing. The entire governance mechanism, the values and the thoughtfulness that civil society brings, if that's going to be bypassed, that's going to be even worse. So let us kind of look at some of the positive things that have happened and try to kind of reduce some of the negative things that we see in the system. So from where I'm coming, we're trying to illuminate the work of nonprofits to help you, advance your mission and be more effective and impactful. And it's taken like 10 years for GuideStar to get 10,000 NGOs onto a portal, when at least 200,000 NGOs are filing tax returns, or, we heard about 22,000 organizations in FCRA. So if we don't voluntarily be transparent, we are going to be pushed towards transparency, not in the best fashion that will help us and our mission to kind of move. On the other hand, I'm saying, these organizations, the asset that we have created for the sector in the last 10 years, organizations across the country, symbols of credibility, people have come voluntarily and shared 72,000 plus PDF documents that they submit to governments and donors on the site, 500,000 users, looking through this and trying to guide their own philanthropy and giving, nearly 5 million page views that are going on. This means that people are not completely dependent on, what government or institutional philanthropy is going to be about. So the next month or so, and especially the next week, is going to see our intense giving season. And, while the experts are focusing on a logical and correct response to what's happened on FCRA, please do not forget about individual giving. I know that the diaspora group is affected, and even the confusion in the payment processors with respect to, FCRA being whether it is nationality impacted, or it is the currency or the address. We need to kind of educate a lot of intermediaries to smoothen the process for individual diaspora giving. And let's not forget that, every single person has the capacity to give. And in our urge to kind of look at CSR, to look at foundations, to look at institutional philanthropy, let's not forget those millions of Indians who want to be part of our journey. And let's start finding out smarter ways, cost-effective ways of engaging them. We've come up with this run, and I'm so glad that over 200 NGOs are participating. Some of these partners, and there's no cost to this at all. It's the donors who are making small contributions to run as well as support charity. There's so many organizations who've come forward and opened up in promoting the run to their people they know. We want people to start telling their story, not just in project proposals, but put out your story in all those portals that have absolutely no sign-up cost to tell your story. This is Let's Teach English was born during the pandemic, 2,100 plus people volunteering and teaching English to so many NGOs, students in India, so how can we mobilize people's time and talent? How are we going to, there's an offer to make 1,000 free NGO websites, all by volunteers. So if companies are saying CSR is dwindling, or if people are saying, I don't have cash to give, people are willing to put their time and give you websites worth 25,000 to a lakh of rupees, totally free in just a week. And there are people in the sector who are making that possible at no cost. And we all need to come and tell us positive stories, not just the legal, financial one, but real one-to-one stories, and help more and more individuals kind of believe that they can actually support our work. So quite a digression, sort of a different voice in this kind of webinar. But I thought it's important that we should not become so despondent and pessimistic, but be up and cheerful and optimistic during this giving season, and try and tell our story and make people feel the power to change our lives when the pandemic seems to be kind of telling us that we are gripped in uncertainty. So with this, I hand over back to you.
Thank you.
Yeah, thanks.
And thank you, Pushpa. I think no better way than to close the input part of this webinar by seeing that there are some positive aspects to it. There are some positive ways by which NGOs could maneuver, overcome the crisis that it has faced. Thank you very much for the different examples that we have shown, and I think a lot of learning has happened through that. Now we are going to get into the question answer round, and this is going to get interesting. Lots and lots of questions have come, and we will try to take each of them. As I promised in the beginning, we will not leave unless we answer all of them. But at the same time, I would also like to say that many of the questions that has been listed down in the chat box has been answered during the course of the discussions already. So I would not take up those questions which has already been discussed, but pick up those which have not been covered so far. But before I get into the question, one quick question, and I would request the panelists, Dr. Fogla, Dr. Patra, and Mr. Suresh Kejriwal, that please be brief in your answers, because we are running short of time. There are a lot of questions that needs to be answered. So please be brief, crisp, and clear to the point when I ask the question. So one thing that I would like to ask Dr. Fogla in the beginning itself is that one possible way out that is maybe in the minds of the people is that because now onward granting through the FCRA route is no more permissible, can we give commercial contract to grassroots level organizations out of FC Fund? Will that be possible, Dr. Fogla?
No. We have to understand that under the general law and under FCRA, so giving any commercial contract to a charitable organization will be perceived as a colorable device to the new provisions, the applicability of provisions. That is one part. The other part is that normally a commercial contract is not given for what is your primary purpose. You don't outsource your primary activity. So you take vendors for doing things in support of your primary activity. So I think it would be premature to convert all the charitable institutions into vendors. So it is not advisable under FCRA, and it is not advisable under GST and income tax either.
Right. So one question which is somewhat related, not exactly related, but one question that has come up is that, what will happen to branch offices of international donors who are sub-granting from India because of this amendment in FCRA? Dr. Fogla.
International donors till June 2000, India was inviting international donors, and they could open their branch offices and do work in India without having any law under which they need approval. There was only Section 29 of Fcra Act under which a no objection certificate was given. Otherwise, no law used to apply. From 2000 onwards, a foreign donor, if it wants to work in India, it needs approval from RBI, Reserve Bank of India. So for a charitable organization seeking foreign funds, needs FCRA. A foreign donor to work in India, they need RBI. So once you have established a branch office in India, the branch office is eligible for 12-way registration, that is under income tax. It is also eligible for FCRA registration. A foreign branch office would need FCRA registration only if it receives funds from sources other than inward remittances. So a foreign branch office, INGO, they don't need FCRA for receiving inward remittances from their own headquarters. For any other foreign contribution falling into their India account, FCRA registration would be necessary. Therefore, to that extent, they will be impacted subject to the RBI norms. I must also add, last year, RBI issued a circular that all branch office renewals should be done by FCRA. All liaison office and branch office in India should go to the FCRA department. But that circular, we believe, was inconsistent with both FEMA law and the FCRA law. And to my understanding, FCRA department has clarified that that circular is not applicable, and branch offices don't need, liaison offices don't need FCRA registration for inward remittances. So therefore, apart from inward remittances, for other receipts, it will impact them.
It will impact. Okay, so Sureshji, one issue we talked about, when this becomes enforced, when this act becomes enforced. Now the question that has come is that, if there is any unspent amount left, can we refund? Particularly if that was through subsequent recipient, if it was received as second recipient, and once this act comes into force, will it be possible to refund the amount? Will refund not be treated as inter-charity donation?
Actually, if you go by the technical wording of the Act, Section 7 Amended Act, they are saying no FC registered organization can transfer FC fund to another organization. So, you are transferring as a refund, you are taking it first time, I think doesn't change the character of transfer.
Right.
However, we should wait for the transition provision of the FCRA rules to clarify all these issues.
Right. Okay. I think that's very clear that let the rule come, much clarity will emerge on that particular aspect. So next question, Dr. Patra, that I would like to ask you, which has come is, in a registered society, all the members or only the executive committee need to submit their Aadhaar whenever they apply for renewal or registration.
Right. So when we are applying, in the application for form, the online form, the list of members, key members. So in that, generally the governing body members or the board members list needs to be given. So those people, their other number needs to be given then.
Right. I think that's very clear. It talks about key functionaries that we need to give. And you can perhaps also answer this question that when should we start the renewal process for FCRA registration? I think it's very straightforward.
Yeah. So bulk of the registrations are going to expire 31st October of 2021. And if that is so in your case, then 6 months before you can apply. So somewhere around March or April of next year, the application process has to start.
Okay, you had also talked about this bank account, of this new SBI bank account that one needs to open. The question that has come is that, if we have FDs in our present FC account, will it be necessary to transfer it back to the SBI account, or can it remain there in the current FC designated bank account? Is it necessary to transfer the FDs?
In my opinion, I think only fresh foreign remittance that would fall in the new FC account, because I would think that the existing FC account that is there would continue. The government will allow it to continue as a second tier, what Sureshji was mentioning, and then there are third tier also of utilization account. So this SBI account will come as a first tier on top of those two tiers. So therefore, it will only a fresh FC that will come from outside will come.
Right. And just to add here, the second year bank account, they are also mentioning keeping and utilizing, meaning thereby this should not go to the SBI account. Whatever you want to keep, it has to be in the second layer bank account.
Right. Yeah. So the next question, Dr. Fogla, I would come to you now. The question is that are stipends paid under a fellowship program conducted with FCRA funds still allowed? The fellowship program bit, always we receive these questions.
Now, you have to understand that the new FCRA Act applies to person, and person includes an individual. So any amount which you receive without consideration, without rendering services, irrespective of the nomenclature, whether you call it fellowship, stipend or whatever. Normally, stipends are against services rendered to a trainee, and if that is the nature, then FCRA will not apply. But if it is a benefit given as a beneficiary for a particular purpose, then FCRA law will apply. That is one part. The second part is that FCRA doesn't apply to self-consumption. When the funds are given to a deserving beneficiary, which could be an individual, and the money is not for a definite purpose, just for self-consumption. So these are the two tests one should put before any payment, even if the name is stipend, fellowship, or whatever. So that is how one should go.
Right. One question that has come is that, like for example, I think it's from an intermediary organization perspective, that if the funder directly funds the partner organization, can the intermediary organization do the oversight and monitoring bit? Can they continue to do it? Will there be issues around that?
There are 2-3 issues attached to it. One, a donor giving to an FC registered organization, it is only multiplicity of number. The law remains the same. The donor gives to one organization or to 20 or 100 organizations. So the law will not change. For grant making, donor can reach out to as many organizations directly. The law bars sub-granting, the law doesn't bar. But the donor directly cannot give commercial contracts, or the donor directly cannot hire organizations to do activity on its behalf, because donor to work in India either should work through an FC registered organization or should have the approval to do activity in India from RBI.
Right. So one quick question, which is partly related, is that, which says that we are a for-profit international organization. However, we are funding sub-grants, sub-contracts, which are Indian NGOs. How the new bill is going to affect our implementation plan? So how does it affect the for-profit company to fund NGOs in India because of this new amendment?
No, a for-profit company registered in India?
No, registered outside India, perhaps.
So a for-profit company, irrespective of the nature of the entity, if it is registered outside India, it is a foreign source. It is a foreign company. It doesn't matter whether it is for profit or not for profit. And if it is giving grants to FC registered organization, I think it is on par with any other donor agency making grant. There should not be.
Right. The related question is that, is FEMA route for receiving fund an option in the present situation?
Now, when you say FEMA route, what you exactly?
Well, that is the question that has come, and I'm simply reading.
So if I understand, FEMA route means FEMA is for
commercial route, yeah.
Commercial transactions other than the charity transaction, because only the contribution part is regulated by FCRA and all other transactions are regulated by FEMA. So as I told, the FEMA most likely will not be a route. There are, to my knowledge, and we have seen donor and many Indian agencies, individuals, companies, under ignorance of law, they get into commercial contracts with foreign donor, believing that they are doing commercial activity on behalf of a foreign donor. But a foreign donor to work in India should have the approval from RBI to work in India. You cannot contract with a foreign. You can contract with a foreign donor or an agency for export of services. For them to do in India, they should have the right to do in India. So those kind of issues would become relevant, but it is a nuanced issue and it may need deliberation. So we'll leave it here.
Right. I think that's very clear, very straightforward and very clear. A couple of questions on this public servant issue. One question that has come is that our board members are professors in university funded by a Delhi government and Central University. Will the professor fall under public servant category?
I don't think a person working, it is an employee, it will come under an employee category, but we have to see exactly the definition. Sureshji, you have been...
Yeah. Actually, we have to see the section 21 of IPC, and that covers 12 categories. And one of the categories also include universities and colleges, substantially funded by or controlled by government. I think we have to see this section 21 of IPC before coming to a conclusion. But the number of entities have covered, and their employees are covered.
Right. So, and one question which is again related is that, can NGO hire services of government employees?
I think the prohibition is on them to receive foreign contribution. If they are receiving a service contract or a vendor contract for their services, they have to see their service rules. Otherwise, under FCRA, they are debarred to receive foreign funds.
Right. Normal course of business against services they provide, one could, but then what would also matter is the service rules under which they fall. That is what.
If they are receiving from Indian source, if you are talking about foreign source, they are rendering services, then they have to examine the contract of the nature of contract.
So one question, Dr. Fogler, and there are many questions which are related, so I may not take up all of them, but largely it would answer the queries that many participants would have. One question is that what are the FCRA implementation or restriction when grants are given to startup, a for-profit private limited company via an incubator? How does this whole FCRA thing work with regard to startups? Because a lot of startups are emerging now.
It is a quite a complicated issue. Try to understand. Startups are the only privileged category of institutions which are mentioned by the government of India, and under the Income Tax Act also there is Rule 17 which says that if you invest in a startup, that investment itself will be treated as applied towards charitable purposes. Otherwise, supporting a private limited company is not treated as a charitable activity. So per se, startups can be treated as legitimate beneficiaries. So when you support a startup, it could be treated as a subsidy given, the way government gives subsidy to a company in a backward area, and it's still treated as a development activity. So in that sense, startups are eligible to receive self-consumption grant. But this issue becomes very complicated. If a startup is given a self-consumption grant, then that becomes taxable at the hands of the startup, because it is not a not-for-profit company, it is a professional company, and it gets taxed under Section 50C. We were contemplating, my understanding, they should put it under a business head. So, but it will depend on the exact nature of the grant and support the incubator has to give. Now, the incubator has to be a charity, a 12-way registered charity holding FCRA fund. An incubator, if it is a for-profit incubator, then the same law will apply to the incubator, and it will be a totally different kind of legal implications. So I have just sounded
right.
Good. Maybe we'll take it up in one of our standard and norm in future.
Okay, I think that's better. So Dr. Patra, some questions to you. One is that can we open multiple utilization account in multiple cities? Is there any bar in terms of opening a multiple bank accounts in multiple cities?
So, as per the present law, there is no bar. Only thing is that the law talks about intimation, but in practice there are forms which need to be filled, and then they have to clear it. And there has been no change in that. So therefore, it should be allowed under normal circumstances.
And question related to that is that is inter utilization bank account transaction possible? So can one transfer from one utilization bank account to another utilization bank account? Inter transfer between FC bank accounts.
FC bank accounts.
Yes.
So at present, it is not prohibited as such, and therefore I don't know whether the new law. But it doesn't talk about anything about this inter-transfer at all.
I don't think so. There is any prohibition with regard to inter-transfer, as you said correctly.
I add here, in the FAQs issued by the ministry, they have specifically said that the inter-transfer is not prohibited, but they should avoid. They can do only on the basis of urgency and the requirement from the commercial expediency point of view. Right. Meaning thereby they are not prohibiting the inter-bank transfer or utilization bank account.
Correct. That's true.
And another question that I would like to ask you, Dr. Patra, is that in case of a violation with regard to these administrative expenses, that for example, more than 20% has been spent, no prior approval is taken. Is there a provision for compounding of offence with regard to this particular aspect?
So as such, there is no compounding of offence provision in that. The other thing also is important that when this whole 20% issue, it will only be picked up under two circumstances. One is when we file our return, so when the way we show it, or if there is a inquiry. In these two cases, it will be found out. If we are filing for more than 20%, then it is good for us to take approval from the FCRA department to say that we are exceeding the 20% for this year because of such and such reasons. But if we are filing below 20%, and then later on if there is an inquiry and the government comes to a contrary basis for or their own conclusions, then obviously they would start their own prosecution proceedings probably.
Right. Dr. Fogla, now this one to you. Now that onward granting is not possible, so one possible way out that is suggested in form of a question is that can we directly, like for example, it gives an example of a hospital, that if you are not able to give grant to a hospital, can we directly give it to the beneficiary? Instead of giving grant to the hospital, can we give it to beneficiary directly, the patient basically?
No, this is not a very simple issue, because in general, you can give to beneficiaries, but as a pattern, as a system, we cannot give to the beneficiaries, because then the issue will be that how do we identify, because the hospital cost per beneficiary could be different. If you are paying 1 lakh rupee beneficiary, how that beneficiary is the poorest of the poor or the most deserving beneficiary. So as a pattern, I don't think it would be permissible, but at individual level, giving to the beneficiary is certainly self-consumption and is permitted. But I would strongly advise that don't try to find work around the FCRA law and create a pattern of funding the beneficiary by collecting information from the hospital, because that may not serve the purpose.
So there are two questions, which is which there are a lot of questions around that. Is this whole issue of giving service contract instead of a grant contract, because of this restriction of onward granting. So is it possible? And related is reimbursement of expenses. That you incur expenses, submit bills, and I reimburse the expense. So these two questions are coming up. Dr. Fogla, your view on that?
The issue is that there is nothing called reimbursement. Reimbursement is in context of something. You give some services. Suppose I will take an example that somebody has incurred expenditure on your behalf and you transfer the money to that particular person's bank account. So if somebody has purchased a computer on your behalf or done a function on your behalf, so if that person is possessing bills which are in your name, that means at the time the bills were raised, that person has given a loan to you.
Right.
Not reimbursement, it is repayment of loan technically, because otherwise the bills and vouchers cannot be in the name of the organization which is reimbursing. So it is repayment of loan. So I think one should be careful about this reimbursement, because reimbursement has to come out of some other contractual relationship. Reimbursement of expenditure as grant or a service contract, which we have discussed. For a grant, you need FCRA. For service contract, charitable organizations, at times they take service contracts, but generally they take service contracts on behalf of corporates under CSR and maybe with some government organization. But service contract is that by inherent nature you declare that it is a commercial activity. A commercial activity would imply that the mother organization is directly implementing that particular program, and that particular the NPO is not a not-for-profit, it is a for-profit for that particular region. Then the GST and under income tax also such activity cannot exceed 20% of your total receipts. So there would be many complications. On the face of it, it cannot be a general planning that we convert all the grant contract into service contract. There might be some ways and means in large organizations, but I don't think it is a general avenue available.
Right. So two quick questions to you again. One is that what will be the implications to individual consultants? There are this practice of hiring individual consultant by international NGOs, but who are consultants and working in India.
No, an international agency can hire consultants for something which it has done in the past or is doing lawfully in India. For instance, an international NGO is funding many FCRA registered organizations. So because it has a lawful context in India, it does have a right to hire consultants, auditors to monitor its program, to look into the program. An international agency, to my understanding, cannot hire consultants or contractors to do its primary activity. For that, they should have the permission from RBI. Otherwise, they should have some work in India through FC registered organization. Without any context in India, without any work in India, working for international agency will tantamount international agencies doing work in India. And so even though under FCRA, the recipient would be claiming that it is a commercial receipt, but the international agency may not be able to justify its right to have activity in India.
Right. So there is another question, which is, can an organization not having FCRA take fund from CSR, as a CSR grant? First of all, do they need FCRA registration? And if this CSR company is a subsidiary of a foreign company, then what happens? Does FCRA apply?
No. As in 2010 there was an amendment. So any Indian company, even if the parent body is the Indian company whose shares are held by, if and one single company holds the share, then it becomes a subsidiary of a foreign company. If more than one investor hold, then it is not a subsidiary. Still 50% shares, more than 50% shares are held by foreigners. So in both the cases, if more than 50% shares are held by foreigners, the receipts from such company can be treated as domestic grant and FCRA would not apply.
Right. A couple of questions to you, Dr. Patra. One is that, it says that if a donor transfers grant to a development office of a congregation who is the legal holder, the development office would usually transfer the funds to the different locations and branches of the congregation who do the actual project implementation. Is this still possible? So basically, you transfer it to a congregation who is the project holder, and then that further transfers to different place where the program is implemented. Is it still possible under this new amendment?
So subgranting is out. So therefore, you cannot transfer to another registered organization or unregistered organization. So registered with FCRA or not registered with FCRA, that part is out. Now, what is possible is that the organization can itself implement, and for implementation, it can have utilization bank accounts. However, these utilization bank accounts have to be approved by the FCRA department. You have to apply for their approval, and based on that you can transfer and implement. But transferring to unregistered bodies or even registered with FCRA bodies, that is completely blocked as a result of this particular amendment.
Right. A couple of questions on this administrative expense part, and there are actually a lot of queries around that issue, which is concerning a lot of NGOs. One is that whether this 20% margin is applicable to unutilized grant as of 31st March 2020.
So, there is a bit of a challenge or confusion around that, and I would also invite Dr. Fogla or Sureshji also to give their perspective. Now, it says that 50%, and now it has become 20% of the grant received. However, if a grant is received and not utilized, that means that year they have an allowance of 50 or 20%, and next year when they actually utilize but they have not received, then the problem is that there is no allowance but they have to utilize. So in some sense there is an anomaly there, because I think ideally it should be that if I am utilizing, then out of that only 20% at present should have been be the right way of doing it. But as the law says about whatever we received, there is a confusion there.
Right.
Yes.
Just to add,
yes, please.
My understanding, we should not read too much into that, because unlike income tax, FCRA funds are subject to utilization. There is no provision of 85% utilization and indefinite accumulation. So it is that whatever you receive over a period of time, you have to apply at least 20% and 80% program and admin So it will even out. In the long run, it will even out. As if in 1 year you have advantage because you have not utilized, and if you take that to your stride, so the larger intent and the interpretation of statute ultimately, I think, will prevail. And it is suggested that it should be taken at 20% of whatever was utilized during the year, and in the long run, it will be 20% of whatever was received during the year. The only exception will be corpus donations received. Otherwise, I think receipt and utilization should be read synonymously.
Right. Dr. Patra, a couple of questions I said on the administrative part. The money spent on people who are engaged in policy advocacy work, is it program expense or admin expense?
Yeah, so this question, which I was trying to avoid, has finally come up. Now, like I mentioned in the rules, those the exception part, the expenditure incurred on training or research. These are the two things, and of course, then the welfare-oriented part. So, if it is on research work, then probably it would be covered as program expenditure if it is on research, as the rule reads now, unless there is a change or amendment to the rules.
Right. Then the next question is this program management cost. Does it exclude field level local mobilization of staff and program implementation staff? I think this we discussed, and while he was presenting it also very clearly.
Yes.
So we don't need to discuss further. So anything to do with implementation is your program cost. Anything to do with management is your administrative cost. That is how it has been defined currently in Rule 5. Next question, which is important, is that does this rule apply to all earlier FCRA money of the trust, or only new funds that will come from now? Now imagine if this new act becomes effective from October. So for this financial year, will it apply to the already received FC funds, this 20% margin, or will it apply from October onwards, the funds that you receive? Because earlier it was 50. They have changed the goalpost all of a sudden.
Yeah, that's an interesting and a good question, and I would also invite the other panelists to share their views. In my opinion, it cannot be done retrospectively. It can only be done prospectively, because you cannot suddenly say that it will apply from a previous date. So, in my opinion, it should apply prospectively whenever it is notified.
Yeah, I agree with Sanjay ji.
So now, as I said, this unlikely that this law will be enacted somewhere in between the year, but suppose it is enacted from a particular month, say October, probably it is not feasible, say November, December, or 1st of January. The first 9 months, whatever money was utilized, 50% slab will apply, and for the next 3 months, maybe some kind of working has to be done.
Right. Two quick questions to you, Dr. Fogla. One is that can a FC NGO give their facilities procured out of FC source to non-FC NGO for their use for charitable purposes? Can you let out, FC assets to non-FC organizations?
No, any indirect benefit given without consideration will get attracted under FCRA. So now we have to go into the technicalities, whether the facilities will come under article, because FCRA applies to article security and currency. So without getting into that, any FC fund or the asset, we would believe should go to another FC registered organization or to the beneficiary. It cannot go to an intermediary which is non-FC. But I will tell you some interesting thing. There have been cases up to Supreme Court. There have been cases where organizations have used non-FCRA organization to do charitable activity, and this issues resulted in violation under income tax as well as FCRA. They said allowed inter-charity grant to non-FCRA organization out of FCRA fund, and court said that it is a compliance issue under that particular statute. It has to be addressed. It is not an illegal activity, and its charitable purpose remains intact, even the activity through non-FC registered organization, but they have violated the condition of registration, and under each statute, For that, whatever penalty they have to pay or compliance they have to make, but it cannot result in cancellation. So that is another technical aspect.
Right. So one question which is of course related is that, are in-kind grant, onward granting of kind, allowed? Or is it only applicable to funds?
No, there is nothing in the law which stops you from in-kind granting or cash granting. Only what we suggest that if it is from FC fund, so both in-kind and as well as direct through bank account or cash contribution should be treated and given to only FC registered organization or to the beneficiaries directly. In-kind, it will entail a lot of reporting and accounting issues. That is a separate issue. Maybe Sureshji can briefly touch upon that.
I think Sandeep issue was whether the transfer of FC contribution in the form of contribution article can be transferred to another organization or not.
Yes, as onward granting.
Yeah, if the issue is that the foreign contribution receipts consists of both the three transfer, article, security and currency.
Yes.
So the word uses foreign countries means it covers all three constituents. So if any article received from foreign contribution, we cannot transfer. The same sub-grantee rules apply.
Right. Correct. So next question quickly, because we are also running short of time, is that if any NGO doesn't want to renew their FCRA registration after the validity, will it mean surrender? Number one. And non-renewal of your FC registration certificate, will it lead to surrendering of assets to the government authorities? Dr. Fogla, you dealt with this subject, but maybe a little bit.
Because this is an issue across the statute. Now the law has changed. Under the Income Tax Act also there are severe cancellation proceedings where the entire assets could be taxed at market value. So under income tax law also there are similar provisions pertaining to surrender and cancellation. And there also, after reading and understanding the statute as the amended law, our understanding is that that a surrender will not result in cancellation. The cancellation prerequisite is that there has to be a violation, there has to be an inquiry, there has to be a finding against the organization. So unless there is a violation, there is an inquiry, there is a finding and an order on record against the organization, I don't think the assets will be vested with the government.
Question related to that is that, if the assets are purchased partly out of FC, foreign funds, and partly out of local funds, what will happen to them once you decide to surrender your registration?
So suppose you have a car, so the two wheels will go to the government and two wheels you have to cut it into two parts, and so that is the spirit of the law. You have to find a way. But obviously only the FC portion will be implicated.
Right.
And that's why, Sandeep, we are advising all the NGOs not to mix up the asset with both the funding at the start.
Correct.
To avoid all this type of complication at the later stage.
I think more or less we are done with questions, unless my technical team brings in more questions that has come. Just one or two maybe that we can pick up is that, if you are getting grant from CSR, but it says foreign nature, how will it be treated as per new amendments such as Bank of America, BNP, etc.? So if you are receiving grant from Bank of America and so on, how will this new amendment?
These are the foreign source. There is no change for this. The foreign source remains. If they are receiving from Bank of America outside India branch, it is a foreign source. So there is no amendment for that. The same rule apply. This is a foreign contribution.
Right. I think this question, Dr. Fogla, particularly even within while the existing act was that even before this amendment, there was always this confusion about who are these key functionaries. They're talking about submitting of Aadhaar and so on. But what is the definition of key functionaries? Whom do we consider key functionaries?
So now this is a very contentious issue under the FCRA Act, and this concept of key functionary is primarily driven by the various forms which keep on changing over the years. I don't think the FCRA Act under Section 2 has defined who are the key functionaries. For instance, under the Income Tax Act under Section 13(3), there is a definition of interested persons. which says that interested person could be a founder, could be a manager, could be a secretary, could be a managing trustee. So I think some relevance could be drawn. It could be drawn from section 13(3) of the Income Tax Act. But on the face of it, if I were to interpret who could be a key functionary, the very fact the word functionary has been used, that a person who is engaged in some key function. So each and every board member probably would not be said to be engaged in key functions. So therefore, whoever is holding any kind of legislative or executive positions in the organizations with a kind of a TOR or a profile under which various kinds of work they are executing may be treated as key functionaries, not everybody.
Right. One question, which is probably possibly the last question that I have, is, in the event that this new enforcement comes in between, and you have a contract with a donor, and which cannot be taken forward, and donor asks for a refund. A donor is based outside India. Is a transfer of FC fund outside India possible under this new amendment, or even within the existing FCRA Act?
No, there are no demons inside the FCRA Act, because it is a commercial transaction, and under the normal civil law, the law can never be one-sided, that you can only receive and you cannot give, or you can only purchase, you cannot sell. So now with a donor, you have a contract, and you have to follow the terms of the contract. And as per the terms of the contract, suppose there is a force majeure event, or you are unable to apply the funds, or you have misutilized the fund, the donor also has similar rights to determine or redetermine the contract, and whatever is mutually decided, it has to be executed. So under civil law, it has to be returned. I don't think there is anything in the FCRA Act to stop an organization to repay the funds back to the donor. In certain circumstances, some organization also go and make a section 50 application before FCRA department and take an approval, which technically is not necessary, but if for an additional safeguard, organizations do take such approvals, and the FCRA department has also given such approvals.
Right. So possibly the last question, which I would end this question and answer round, unless the panelists have anything else to share, is whether this amendment also applies to PM Cares Fund. And now PM Cares Fund is FCRA exempted, and therefore the new amendment will not apply. And not just PM Care Fund, there are many other exemptions provided under FCRA Act, which does not apply. So, and therefore even PM Care Fund, FCRA Act does not apply. So therefore this amendment naturally would not apply. So I think we are done with the question and answer round. Very enriching discussion. A lot of issues was brought out. Even right now, we have more than 1,000 participants still logged in. So it also goes to show the kind of interest that people had during this afternoon. And similar number, we also had viewership in Facebook Live. That is what my team is reporting back to me. That there were a lot of people following in Facebook Live. At this note, I would like to invite the Executive Director of FMSF, Dr. Sanjay Patra, to please come forward and offer our vote of thanks.
Thank you very much. It has been really, really enriching, and we have been able to analyze the law. We have been able to see the challenges. At the same time, we have also seen the positivity and also what can be done. Thank you very much, all the panelists, Dr. Fogla as a principal speaker, Mr. Suresh Kejriwal, Ms. Puspa Aman Singh, Ms. Meenakshi Batra, Ms. Ingrid Srinath, and last but not the least, my colleague Mr. Sandeep Sharma, who moderated it so ably and kept the whole tempo flowing and made it interesting. So thank you very much. It has been a very enriching experience. Thank you for the overwhelming response. We'll keep doing it. We'll keep having much deeper webinars. going much deeper into few subjects. And watch out for updates, watch out for announcements. And also, if you think that there are questions which were not answered, our technical team is still collecting. And probably if these are questions which are required to be answered, they would definitely write to you an email and answer. You are also invited to write to us so that we can answer your specific questions if there are any. So thank you very much for this evening. We are really grateful to each of you. We value that, we understand that your time is valuable. And at the same time, this whatever we are faced with right now, I'm sure that with all our expertise, experience, we will be able to find a way together. Thank you very much and goodbye.
Thank you. Thank you very much.
Thank you.